Okay. All right, let's see here. Hey, good morning. Wreck-It Doc. Yep. Kind of want to take some time to look at AMC today again. So I found a trend that I really like. I think it's correct. I just want to like evaluate it better, but I need to probably clear the chart to do it effectively. So what I want to do is there's two competing parallels here, and I already knew about the one, but this other one, I actually already had it on the chart as well, but I was using it from this baseline over here and not thinking about how it was offset, and it was offset. It's a bit strange. I wouldn't have expected it to be that way, but it just is. So I had this trend from bottom to bottom, basically, and I made a parallel out of that trend, but it's not like what you would think. It doesn't go from this low to this low. It goes from the low in April of 2024 to March 13th area. And the reason for that is quite simple. There's a cross down right here, and we talked about this before, and I'm just jumping right into it today. But we had talked about this before because this is a important element in the I call it like an S curve, or really anything, an M cross that goes down. But this is always trying to get across something, right? And so there's multiple ways of understanding it. One would be very simply, which would be like the bottom, right? So most people, when they look at this, and I'm not saying this as like, oh, we're special or something like that. That's not what I mean. I just mean that like, there's nothing wrong with looking at it this way. Most people that look at it would just say, well, this was trying to find support on the previous bottom, and then it failed, which is true. And it's an easy way to understand it in terms of a weakness as well, because it punches below that bottom and then comes up and distributes. So a very safe, very effective way of looking at this. Nothing wrong with it at all. I'm not critiquing it. I'm enforcing it. I'm saying it is a good way to look at it. It's just a simple horizontal structure that distributed into a sign of weakness, and then it pushed back up and ultimately did a UTAD, up thrust after distribution, right? So it distributed down, came back up, and then this is the M cross that fails to continue. It does not rebound here. Ultimately, it goes down into what would then become like the April 2nd tariff deadline. So that region right there is very, very important on the whole, because again, when you look at the bigger picture, this was the first reaction. There was a weakness there, and then there's a second reaction. So this is sort of the main back test. And my theory was ongoing, but it was ultimately that like we didn't come up high enough. And it's no longer a theory. It's been proven true at this point. So I'm happy to say that idea that I had was correct, which is that when you have this breakdown, this drop ledge is ultimately the place that we really want to go back and distribute, because it was left behind. And there's a lot of reasons why you may not go up there immediately. But we noticed that from a big picture standpoint, the behavior of our Vanguard operator, they are the EMU in this case, they're the biggest holders. And by the way, their holdings have increased quite substantially. They've gone from 30 million to like 42 million shares. That's pretty significant. I mean, so just so you're aware, like you might say this is just a bunch of selling and it's all institutional driven selling. Well, that's true. There are a lot of institutions that are selling off. But my theory was that most of those institutions were the ones that bought in back here that ultimately we're trading this range and maybe held it too long, or we're expecting something different, and possibly both, or they are trading with derivatives of mine, like they're lending out shares, so on and so forth. But as expected back here, when Vanguard first, when I first looked at their positions, they were in at like 30 million, potentially back as far as March of 2024. Now they had exited, I mean, they had dumped a huge amount, something like 60 million shares or something ridiculous. Or I should say that they went from like a really high number of shares, I think it was like 60 million, to like significantly less. So they were probably one of the key kind of sellers back here as well in this area, and probably were part of the reason this went up high as it did, because I bet they dumped a huge amount of their shares early on in this top region and instigated that sell-off. I don't think that they sold all the way down here at the bottom and sold low. I think that was probably, again, reactional to all the other stuff going on. All they had to do was set it up as they needed to and then kind of like monitor it. And I do think that they are manipulating the stock with the whole shift and everything like that. And ever since then, though, I've been watching them and they've been growing their position. And so I had speculated based on 13F filings that back here, they seem to have 30 million shares, and they kept them all. They didn't sell anything during this crazy price action, which surprised me. They seem to have the same amount, but they could have swapped them out, which is very possible. And then in addition to that, they had one position. So Vanguard is not one fund, as you guys are aware. They have hundreds, maybe thousands of funds. I really haven't looked, but they have hundreds, at least hundreds of these different kinds of funds that they run. And this is true for all these huge operators, right? Because they're offering products basically that they are trying to attract different people in different sectors and yada, yada, yada. So anyways, they had one fund that was short. Now, that's all we know of. We don't necessarily know if there was more, but there was definitely one back here. And I recall it was like 350,000 to 400,000 in short positions, which is quite a bit. Now, I had speculated at the time that during this time period right here, from beginning to end, that they would be driving the price down, and when they do that, the shorts would be exiting their position. That also was kind of proven true when we looked at those filings, because the short positions had decreased at least by about 10% or more during this time period. So there was this theory that I had that the average there between the long and the short positions was probably wrapping around, again, this kind of liquid middle, maybe at $6. If you think about buying all the way down, that would be possible, with a heavier extent being bought down low before this markup, meaning that they're not going to be, and I said this multiple times, like they're not going to be in the red if you bring it back down to $3, which is where we are now. I was like, that's probably where their average is. Like, it's not hurting them, to hold their shares up here, because they can lend those shares out. So they probably were lending out a huge number of shares during this time period to short and to drive the price back down to their average, where they could then accumulate again, and they are accumulating. That's my theory. I don't know. That's a very simple way of understanding it. I get that. But during that time period, it's also worth noting that the short position that was bought here would now be profitable again once it dropped back beneath like this 430 area, which again is where we kind of dropped off the ledge. So a lot of this stuff, when we're talking about these markers, I don't talk about like specific positions, because I think it's a bit speculative on my part, because it's certainly with the short positions, you really don't know half the story, you really don't know what's going on. But that's why I think these markers exist in part. So it's not just about, well, I mean, it is just about liquidity. I guess everything can come back down to liquidity. But ultimately, there's a story, there's a narrative going on. And the idea of an accumulation here and then another buy-in, right, which hikes your on balance, and then another sell-off, sort of a final covering of the shorts down here early on, they're going to be the first out the door, right? Like, because they're the biggest operator. So if they had short positions that are averaging up to like, pretty much that 485 level, you can imagine, and then they're given this opportunity while it's coming down to do even more, you could accumulate a lot of short positions, essentially, that are going to rake in the dough from whatever low you're going all the way back up to 485, which makes perfect sense to me, because when you see a markup in a accumulative Wyckoffean range, you pass through the range. You don't go step by step anymore. Basically, you just go all the way through it. It's essentially like a mad rush to the door from shorts, except for the operator who already has their positions and has already unloaded a lot of them even down low. They're not going to need to unload very much to get it going. Just like when you're up high, if you're selling, you're going to sell before the actual sell-off really starts. They're just like that. They're going to cover before the actual main covering starts. And the rest of that's accumulation. So anyways, so there was this idea that like when you got to $3, you're probably going to be back near what I would consider to be the more common low average, perhaps, for that big operator's shares. So that shelf is very, very significant, that $3 shelf. And a lot of people said that they thought that that wasn't ever going to come below 3 again. And I had said, I don't think that matters, because the idea is they actually checked liquidity here. Now, they did find buyers, obviously, a lot of buyers, right, below 3. And once they got above there, they took it up and did this whole operation. But you're really just building a case for going lower. That's what all this is kind of about, right, is like driving the price back down so you get back down low. So they obviously found buyers there. There probably were quite a bit. We know there was like billions of dollars or whatever poured into the stock at that time. So it makes sense to me that then you have to kind of build a case, build a short case for it. It's very interesting to me to think about the narrative of it. I know we're talking about other things in the market today, but it's really interesting to me to build a narrative for this trading pattern that's not just about technical analysis per se, but the underlying technicals are based on what's being traded. And it makes perfect sense the more I've come to understand institutional trading, just reading and learning more and watching the charts move. It makes a lot of sense to me that you would build essentially like a bear case and get bears to take the price down for you, And at this point, the sentiment in this stock is so shot to death. I mean, like, it's crazy. You have people that come in here every day and they'll say that it's dead, it's never going to go up, blah, 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 blah. I mean, that's exactly where you want the narrative to be when you're a bull operator. I mean, you would not want it to be, it's going to go to the moon until you're done. Like, you want to be finished with your accumulation. Then you want the news to be late to the party. You want retail to be late to the party because you're planning on offloading shares. You need them to carry the bulk of the weight for you so that you can sell into their hands while they're buying it up. So it's always slow. Like, retail is always behind the curve in that way. Now, that's why part of the reason why I like the contrarian play, especially for AMC, because it does have clear market signals. It does do these things where it creates these ledges and you can track them. And if you watch the wave pattern build and you can kind of get a grip on it, then you get that clarity. It's like looking through the window. You know what's out there, but it's a little blurry. This kind of gives it a little bit more clarity as to what may be going on. So when we talk about that on-balance hike and then a potential spring, we understand it as like really kind of like the final, in a lot of ways, it's probably a lot of that's covering from, again, those positions that they probably had loaded up on. And like the operators that are in the know are aware of this is the time to get out of short positions. This is the time to get an early out, I think, of short positions and also get your buy-ins. Not necessarily, again, that means that they couldn't buy in again low or that it couldn't stay low longer. In fact, most springs have an accumulation phase in them. They don't typically go down unless there's buying. But there's such a strong narrative right now for downside. And the news and the world news, the geopolitical stuff that's going on, I think adds to that. There were a lot of people who were on the weekend. I didn't even really look at the market until this morning. I really looked at it and just kind of was reading up on everything again. I'm aware of what happened. I'm not ignorant of that. I'm not going to comment very much on it because at the end of the day, nobody knows what's going to happen. And so it's just speculation. Like, and I mean that in the sincerest form. Like, it's not anybody that says they know what's going to happen next is lying. I just don't believe them. This is a tale as old as time, right? And it's been going on for, in some ways, thousands of years, but specifically in the last 100 years, it's a cyclical thing, and there's always been different results. And so it's not really possible to predict how the market is going to act if we don't know how the world is going to react. So instead, I think it'd be best to just kind of continue down the path that we've already been on, which was that there's been an overwhelming sense of weakness in the market, but it's weakness that has this kind of like ounce of maybe to it. Now, I'm not a big fan of that because it may be a dangling carrot. And I've said repeatedly, I'm not really interested in this last little leg here in terms of trading. I do think you could get away with it, and I think that there's a possible option here. And I got some 600 because I was like, there's a possibility that we get some volatility Monday, Tuesday, not expecting there to be, this big world event that occurred. But there certainly was a possibility, and I still think that there's a possibility that we need to go back up to at least 600 and backtest it before we drop. Now, if we don't do that, then I'm going to be looking at this level at 600 saying for a long time now, just like we were back here, perhaps even when it starts widening down, going from March into April, you start looking at that, you say, that's a ledge you're going to come back to later. This would be the same thing. Well, whoop-de-doo, 600 is the top. Of course, we're going to come back at some point, maybe in the future, if the market ever recovers, yada, yada, yada. That's not hard to predict. No, it's not, but I need you guys to kind of like track with me here because what we had been talking about was not a bullish run. What we've been talking about is like an upthrust, a UTAD. There's a distributive action taking place. It's already broken in a lot of ways, most of these trends, not all of them, okay, but a lot of them have already broken down. So what we were talking about isn't a leg up that just continues to like 650 or something, which I've said before, like if it were going to go there, that'd be the highest I could see, like this area up around 650. But I've been saying, like, I don't think that's likely. I think what's very likely is that we're going to meet this top again because there's 1, 2, 3, 4, and then that's where the drop ledge is. We've hit the first one, which is the widening, which means this structure's done. So anything else is kind of a bonus. Don't get me wrong, it is. But I don't see us just dropping off a cliff like we did previously and heading back down to retest. And I think the main reason for that on SPY, and I'm going to come back to AMC in just a second. I know I just pivoted really fast. But I think the main reason for that is that when we came up, it did do a sign of weakness at 575. So in my opinion, 555 is going to happen probably. I think we're going to come down low in this area, but it did technically back up to 575 already. That didn't happen previously. In the previous motion here, and it looks very similar, you can see that motion. This doesn't make a higher high after the 1, 2, 3, 4 top. This one is doing the same thing, but it's sliding low. It looks kind of similar. It certainly gives you the feeling like, well, bad news could just send this off a cliff. And you could open at 581 all of a sudden, tomorrow or the next day. I'm not against that idea either. I think it's possible. But the difference here is subtle. And it's important, but it is subtle. And that difference is that when this does this jump and then does a sign of weakness, you can see it's very high. Notice that what we're talking about here, this whole setup is lower. But notice where that level is that it backed up to. It's the exact same level that ultimately was met on this SOW from 2024, which is the November SOW. And look at where it ends up at back in March before we go into that April. So we really already hit that level. Now, that might make you think, well, that's not good, right? I mean, if we already hit that level, then next time we drop, because this is set up lower, wouldn't it necessarily be below that? Well, potentially, yeah. And there are gaps all the way down on SPY. I don't think anyone's questioning that it's impossible. Also, going into the April 2nd deal, we were already in a hook. You can see it already made a drop here on the 31st, and it wasn't likely going to run up, right? So it was already in a distributive pattern. But before that, the weeks leading up to it, you had a run up that was pretty well long-lived. So there's this question mark in my head about continuity, and I'm like, it doesn't even have to come necessarily above the top. We really could hit like 603, but there's a missing piece. And this is what I was saying in the group this morning, because I was saying that there's no, it's not really there. Like, I just don't see it. Maybe this is going to be it, and this is just going to kind of chop here on high volume and go sideways and then dump, and it could be as short as 2 days. It could be a week. But what I'm not seeing is that final UTAD on SPY. I just don't see it. And I'm missing, if I'm missing it, I'm missing it, right? I already know there's divergence here. Don't get me wrong. This looks weak. But what I'm expecting is that it's going to do it again, and it's still not here. Like, I was thinking like the 27th, which is this Friday, which is weird because you're like, well, it's never going to happen, right? Because this bad news, and now the market's just going to dump. I don't know. The market's weird, right? A lot of times, like we were just talking about AMC, we go up before we go down, It's like you bring that up so you can initiate like a bigger sell-off so you can get, loaded up. If there was already a plan to do this doesn't really hinder bears. It doesn't. It's kind of a final bull trap. It does shake out some bears, but that's kind of a good thing, right? If you're trying to get, weak into strong, right? And in some ways, that's a positive thing. And again, you might say, well, the market doesn't shake out shorts or something. Like, people say kind of all kinds of stuff. That's not true. They do all the time. Right? And not everybody in the market is bearish, not all institutions, right? But there's often that final UTAD. That's exactly what it is, right? It's a final kind of a trap. You will have shorts covering, and they'll get kind of screwed over. Just like in a spring, you'll have bulls that are exiting, right? It's a final shakeout. So I'm not positive, not 100% sure that's going to happen, but I've been talking about this for a while, and I think that there's a good chance that it still happens. I don't think this particular trend right here needs to be met again. That one goes really high. And you can see on the S&P 500, technically that was at 604. That could be done, right? So you're probably wondering, well, what's left, right? There's nothing left. Not quite. When we go up into these structures, I usually pay attention to the M crosses and the waves. And although that one is met, I think there's a larger one here that may not have been met. And that's really all I've been saying, is that I'm not a big fan of this play because it's speculative. You're trying to kind of guess on like a final shakeout. You're using not questionable methods, but you're using kind of like it doesn't happen all the time kind of statement, which is totally true because it doesn't happen all the time. The UTAD could be very low and weak, and I was thinking like if this failed, it probably would be right here, just underneath 600. It wouldn't have to go way above. If you can find enough sellers, you don't have to take it up, and so this fear-based selling, this idea that like the market's going to tank, I don't actually think it flies in the face of what we've been talking about anyways. Nor does the idea of going up for a UTAD seem out of the question, even on something like what would be considered kind of bad or negative news. But that being said, you have to sort of see, see it for what it is. I don't see this as bullish, right? That's not my position is not that this is like a bullish setup. But my position is that I think you could have potential for an upthrust, like a final move to the upside. And it makes sense to me on the whole. So I was looking at this on AMC, and I don't see this as particularly different. Now you might say, well, maybe that's what's happening today, with the market. Maybe it's already doing that. It's up today, and it doesn't need to be, in a lot of people's opinions. Well, again, I think in a lot of ways, we were going into the weekend, the market had already been selling off since the 11th. So we haven't made a higher high since then. And so, there's been a couple weeks of downside leading up to this. And people were already aware that this was going on, and it hasn't ultimately resulted in something that's permanent or definitive just yet, right? Now, if suddenly so-and-so declares war on the U.S. or something, obviously it's going to change things. On the whole, your market positions are probably pretty red today. It's probably looking kind of like a sour day. So I wouldn't say that on the whole it's like a good thing. But you also have to just take into consideration that sometimes, again, even though it may not make sense to you all the time, just the big picture often has us going up before we go down. So just keep that in mind. Things aren't always set in stone the way that maybe we imagine that they would be. So I'm not sure about this yet, but I will say that on the whole, most of these positions in the market, in my opinion, still look like they could be forming like a second wave. So I had looked at GME and I looked at AMC this morning before getting on the stream. And GME came down and it hit the middle target. So I had three targets. One was like 23.20 or something. One was 22.80. And it hit like 22.80 on the dot. But that was easy. There was a preliminary support. Well, there was preliminary supply here when it started coming up. There was a weakness, and then it kind of dropped. Now, this can go very, very low if it follows this weakness down. You could see that could drive the price pretty darn low here. So that wave already has a built-in structure to it. You don't really have to question it. I'm going to move this out a little bit more. It's right there. So loosely built on this structure right here. That could come back down to 22.33. Why is that happening, Booksy? Why is that the case? Again, not complicated. Back on the 13th of June, there's a gap right here. It closed pretty low, I guess you could say, by comparison to where it ended up at 23.90, but it closed down here at like 22.10 or something. This is really interesting to me because this level right around 22.10, again, go back to April 2nd, the whole tariff deadline thing began then. This is where we were on April 2nd. It was at 22.30. This is the exact same region. And I've been thinking about that because I was thinking that, a lot of the market seems to be targeting almost like a reset on the reset, where we're coming back down to wherever we started and sort of like a rinse repeat, cycle maybe. So there's been multiple gaps here from 22.30 down to about 22 on the dot right here. You see large gaps in this area. And that's right where we are now. So it's certainly acting like a support in a sense. And it makes sense then that if we made a gap, we might make it right around that area. So that bears, right, would want to then drive the price towards that gap, right? That's where the natural inclination is. So you're going up, you're seeing the distributive action try to take place. But then here comes the question mark, right? Is this a successful distribution? Now, the answer is it might be, and we're not quite there yet. There's some problems with this, which is that as this is going up, it is making higher highs, but it's also making lower lows. This became a widening spread pretty quickly. I think it's very easy to see it. A widening spread on a top typically is not very bullish. If it does become bullish, it usually is very, very strong. So if I were looking at this and saying, well, how did this price trend after this point in time? Mostly higher highs, only one really lower low, and then it makes a higher low, and now it's back down to where it was again. We could say that certainly this could be possible, that this is just a widening and then narrowing spread, and then some kind of a breakout or breakdown is going to happen. And we're really like kind of sandwiched between that and the creek anyways, coming from up high here. So it makes sense that you're widening going into this. And if you had a breakout, right, potentially this could be extremely bullish. Even if there's like a spring motion first that drives you down, you could have a potential reversal on that that's extremely bullish, right? Because again, you were trying to get higher. So where are they going? Where are the bulls going? They're going back to 25.72. So right now on GME, that seems very clear to me. And I know why, because that, again, is where the ice is. It's also the intersection here, if you look downward on that major triangle. And we were talking about how we didn't want it to drop beneath 26. That's the reason why. Because it's not 26. I had 26.02 on the chart. I think I just plopped it on there. It's not actually 26. It's like 25.80 or 25.70, but it's right there. So this is not only like a necessary backup. It's almost like it kind of has to happen in order for bears to secure advancement, because they needed to prove that it's not going to go any higher than that. And there's not been a back test on it. We had a really simple wraparound, and it's clean as all can be, right, around that target right here at that 25 area. So to me, it's not even a question mark in my brain. I'm like, yeah, that's a 50% retracement on the drop. It's dead center of that major drop from the drop from the earnings down to the bottom. It's the intersection of both the ice and the creek that was lost. Like, there's almost no question in my brain that would be the target in mind. And I think the market players are aware of that this is where you're going to have to prove you're going to go up or not. So the question in my brain now is not, will this rebound happen? It's like, how does it happen? And if it doesn't happen, then when does it happen? Because I think it will. Like, if it doesn't happen here. So right now there's a pretty strong intersection at on Thursday, the 26th. Okay. Usually what these are, as I call them, these triangulations, as I call them, they're very simple. Like, they're usually, again, triangulations that could represent either the peak or the pivot. And if it's the pivot, then it's a low. And that's kind of confusing, but a lot of it depends on what happens right here, because this is a first wave. So even though you've got the widening, which is there, it's kind of obvious, you also have an M. And this is important. So there's a reaction, it drops down, and then there's a rising M shape, okay? And this rising M shape has a stopping point around 2280, which is part of the reason why I thought if it came down low, it's probably going to go there first. Again, pretty easy to identify. There's almost like 3 hits on it, so it seems pretty straightforward, right? And it was the previous top over here. But that's not just something that like happens just because, right? Oftentimes there's a sense of liquidity grab that's going on, and you come back down to that center mark liquidity, which again is here. If you're careful, you can see that on the walk-in. It actually was established during the walk down. Again, like, this is the cat ear thing that we talk about all the time, like the support and then the resistance. And then look at the direction that's built on that support and resistance. When you see this stuff happen in the market, you should mark it off, because it's going to matter, right? And especially if there's like a rising trend, when the market rebounds, it's going to gravitate towards that direction. Now, as soon as that happens, there's now a new high right here, and then another high right here on the first push. This is where things get kind of interesting, because now we have a cross because it jumped over. Notice that as this is building outward, it's actually respecting, because then it comes back down. It's now respecting this cross. So we have 2 main directions being built out, right? One is driving you back towards the gap fill, which is over here. I'm going to move this over. It's like down low. So it's this guy. So this is one triangulation right here, right? Right back down to 22. It's not that low. I mean, it doesn't make a new low, but it's there. And it is based on this because, again, this bottom, because there was a gap there. But it also now has directional input from these tops. And you can see the back test 1, 2, 3 right here, maybe even 4 on that trend. So again, that's the bearish directional trend. We're testing it. And then you've got 1, 2, 3, and then almost 4 on the upward trend for the bulls. So this direction, both being tested. This is how you develop a new trend, a new wave, a new range. Pretty straightforward, actually. Now, we could get even bigger with this, and we could talk about how this kind of right here, this like cross right here, works into something else, which is another big cross that didn't get a back test, which is this guy running up, which is what I already have on the chart. That's why I don't leave these things on the chart for no reason. I'm not a glutton for punishment. When I look at my own charts, I want to obviously see things clearly, but you have to remember, like that trend right there, if there's a rebound in store later, that's going to be met. Like it was abandoned and it wasn't back tested. Just like here, when you do these back tests and you do these hooks and yada, yada, yada. And again, there's probably more than one place to kind of illustrate this. You can see that right there on that hook down, but there's nothing in the middle, which is strange, you know? And again, where does this go to? Right back to April 2nd. So just like you had downward direction here and upward direction, and now there's kind of this space between, certainly it looks like it could go pretty low if it kept dropping downward direction. Nobody's questioning that because of where it is. If it were going to do that, it would still be prudent to back up first to near 2550, say that, yeah, we're not going to go that way, and then drop down. Now this presents itself as now a fuller S-curve, and it probably would be pretty similar to whatever this drop was. Yeah, pretty much on the nose, right there. So that gives you a sense of like, all right, bearish direction seems to be driving it towards 1860. We already know that there's a bigger target in store potentially down here at 1750 down the road. This could be a very long-winded and boring kind of a sell-off period for sure. And it may be that this ends up becoming a bit of a wedge or something later on. I don't really want to speculate too much about that just yet, you know, but you could have something like this where it breaks out and comes down or whatever, right? Certainly could see something like this happen going into August if it's just a really red month of July, all right? But that being said, then where does it go, Booksy? Well, what happened to this trend was that it was lost. Right? Now, that doesn't mean it has to come back, but just like we're talking about here, when I just said it a minute ago, if this comes down and it hits the bottom and it reacts upward, it's going to go back. So I was saying it right here, I'm sorry. Right here on the small scale. If this is an M cross up and it comes down low, right, and it finds its bottom and then it reacts back to the upside, just like this guy we're saying probably is going to come back to here, because it's going to go up and meet that end that it needs to try to meet because it left it behind. That's no different than what we're saying on the big picture right here, which is that this has developed, again, an even larger widening of sorts, right, where it's driving the price up. And notice that these are escalating, like they're getting more and more accelerated now, you know. And I think we've already got it on the chart. I think you've got a pretty clear path to the next path, or excuse me, to the next drive, which is up here at 50. I don't even think I need to change it. I think it's right where it should be. Because again, that drive up is being left behind. So you may not get there now, right? And we talked about this before, like there would have to be a lot that happens to build out here. And we mentioned what those things were. I had it coming up to like 32 and then back to 25 and then breaking out. That's the high path. And that's an M cross path that's basically reactive early that then builds out. And that's nothing wrong with that. It's totally possible. It's a different way to accomplish the same thing. And it really just depends on, again, what are the liquidity needs for the the operators and what are they wanting to do. And then we know that later has some pretty massive implications as to what could happen later down the road based on certain things. We're not going to get into that right now. This would be the stronger option to not have it dip super, super low, because again, dipping back down to 17 here does present, unfortunately, a very real possibility of coming back down to 980 if the operator is able to kind of rinse and repeat. It wouldn't be without much ado. You'd have a lot of different steps to get there. You'd still come up to $40 or $50, $50 plus dollars. But the point is that micro setup here is built on the same principles that you've missed on it a little bit. You missed the mark a little bit. You're probably going to come back again. Well, couldn't this just be a UT and it's going to drive the price low? Yeah, that's what I'm saying. But it already would be if it does this, right? If it drops low. And this presents, again, a whole slew of other questions. We'd have to kind of walk through that when we get there if it goes down first. Okay. But right now, I think it's kind of obvious that even if it goes down, this M cross may not be done. This looks like part one to me. I think that there's very realistically like another move up. Because in both cases, whether you're going to kind of build out high and break out, or you're going to come down low and break down and do something in the middle in the meantime, more sideways here for uncertainty purposes, I think that it's very likely in either case, and we're kind of building it all off the same level here, by the way, which is this middle. I think it's very likely in either case that you need to come up here and define that top, okay? Because it would act as both. Like it acts on behalf of both sides really well. This is fine, by the way I drew this. I don't know. I made it look like it has to come up really high, but that's not true. It doesn't have to do that. Not yet, because if it's not advancing right away, it can kind of build out again and then do like an SOS and then another SOS, which is what I've got here on the side, which is more of like probably more realistic anyways for something like GME to do something like that. So everything you see here on this chart is based on existing lines. I haven't created any lines that don't exist, which I'm trying to avoid right now because I think with all the speculation, we need to just kind of keep with what we have. So I'm not using anything here that's not already on the chart. This right here is already on the chart, you know. It could be a combination of things, but it's already there. All right. The idea of this having kind of this do or die moment on the 8th or the 9th, probably a market-wide thing, you know. And again, a build out here isn't bad at all. And we may see that the negative news does drive us up and then back down into that April 2nd area that we were in previously. And when we look at that on AMC, it's the same thing. Look at where we were on April 2nd. Weirdly, we were already down, right? So there wasn't much of a drop on AMC. Tariffs wouldn't have affected AMC that much anyways, which isn't like not quite. I mean, there were talks about movie tariffs, but I don't think, again, that's going to go anywhere because ultimately, like, it would be very difficult to tariff the film industry. It's complicated. It's more complicated than just like a physical product. Plus, there's all kinds of international rules about digital media can't be taxed that way. So there's a lot of hurdles. Anyways, it didn't really make a huge impact. This was already going down, and it just has the final leg of the drop, right? The 2 days following April 2nd, and then it just reacted like the rest of the market, but it was already in a downtrend, you know. So was SPY and at that point. So, I mean, we look at this and we're like, you know, coming back down to 270 or that region is totally possible by the 9th. And you definitely could see how that would need to have like a secondary upthrust. Now, this has a widening channel coming down. It still is not broken down. It could. I mean, feasibly, this could break down, but right now it's a wedge. And I was thinking about how it's wedging into the corner of this widening. I mean, it looks to me like very simply that the way that I had measured it out was that it would be in this region from pretty much today until Friday, that this is where you would have the potential for a reaction to the upside because of the measurements here. Now, it could be a little bit different. If it drops early, obviously that changes some things potentially. But there's no doubt in my mind that that is an iterative motion right here, guys. And it's iterated again and again and again. Like you can see the 1, the 2, the 3, and the 4. It's like the owl with the popsicle or whatever, the lollipop. A 1, a 2, a 3, a 4. It's clearly doing like a rinse repeat, but notice what's happening with the RSI. It's building back out. So even though that's not always a good thing for us, because sometimes we found that that's propping it up, it's nowhere near where it needs to be, in my opinion, to get a really succinct sell-off. And every sell-off has been weaker and weaker and weaker. You can see one, I'll show you. Here's one right here, and then there's the backup. It's not a 50% retracement. It's like a 30%, 20% retracement. There's 2. There it is again. 3. Potentially this is all part of 3. It could be 3 and 4. When I was reading it, I looked at this, I saw that M. I think that could be all by itself, but it doesn't really make a huge difference. That's iterative motion, and it's certainly forming a triangle. And again, my concern is where is that ultimately, like, where's that deviation coming from? Where is it starting? And it starts back here. It started on the gap at 331, which we had picked out as a level, funny enough, kind of early on. I don't remember exactly why I picked it at this point. I think because it was indicated like as a really good middle level between 460 and like the potential to get to a low. So we were looking at 1 penny below the floor up to 461, and we found that 331 looked like the most likely number. And again, strangely, that's where the gap ended up being. And we identified that when it was back here at like 333. So lest anybody say that we fudged it and we put that on the chart beforehand, we did not. It was there, and we were looking at that back here, and I was like, it's a 331 is actually kind of the magic number. And then it's kind of freaky, right? When you see like something like this happen, and then it drops from 331, and you're like, huh. Well, obviously that was an important marker for the chart, and it stayed that way. At this point, I'm most concerned that it's going to stop at 331. And again, it's probable that could happen right here. Now, based on the way this is set up at this particular time, if this has a reaction to the upside, my new question is, does it actually have to be where you have it, right, at this 309 on going into the 9th, right? I thought we just said it was going to be, already down here. Well, if it moves fast, yeah, it should, in my opinion, I think they're going to bring it pretty close to that April 2nd area. There is another possibility, though, which is that this is structured in terms of a channel. So bringing it full circle, if you guys have been following me, this was a big market kind of look at why I think a UT or a UTAD is still possible, even in the midst of the news that we have. I'm looking at this like, yeah, part of me looks at that and I'm like, this looks really bad. It looks like an M cross that could have a final leg down. It's the same thing we're talking about to some degree on GME here, with the final leg down being like this really big drop. But it does seem like it's possible, maybe not inevitable, okay? But it does seem like it's very possible that we need to have that push up first. If we don't have that push up, I'll tell you this much, okay? If we don't have that push up, I think we're going to see actually a really big reaction later to the upside, almost immediately after the down. Because if this indeed doesn't push up and you're measuring it out a different way, which again, this doesn't really make sense, because see how this motion comes up in a hook? This is completely different than what we're experiencing right now. We don't have that hook, right? We're really in this motion right now where we're kind of doing this part, the downward part maybe. If we're going to have a hook, we'd be doing the downward part of that hook. We haven't actually done the hook yet. So could it be, again, a shallow thing where it only goes to 24? Yeah, it's possible. But that motion doesn't look the same as what we're experiencing at the moment. So if we were to see this as the same or similar in terms of a reaction, timing wise, just looking at an S curve and saying, let's say the timing on this and this is the same, then yeah, you could maybe speculate that this actually needs to have a hook going into the 26th of June. That's really close to where you already have it, isn't it? Yeah, it's pretty darn close. So I think people, when they hear, and it's at 2271, no, it's breaking down right now. That's okay. I don't really care about that because I think this drop may be necessary. But a lot of times people, when they hear this stuff and they think that you're talking about it in like bullish terms or bullish terminology, they misunderstand what it is that you're actually describing, which is I'm describing essentially a hook or an upthrust. And that is not a bullish pattern. That's a final kind of nail in the coffin pattern. It's really important to kind of distinguish that from what maybe some people might think is just like it's going to pop and then just run. That's not quite what I'm saying. And I've had some success in tracking these kinds of things. Not all the time, but I've had some success in it. When you look at this and you think about this as a potential to do something similar to what we saw up top, again, it's like, where is the hook motion? Where is the upthrust? It just isn't there. This is not there. You might say, well, it happened right here. It's already over. This was it right here. Well, then it's really quite bullish if that's the case, because this is rising now at a rapid pace. So if it drops again, it's going to be even more volatile. Like that's what I'm saying. The volatility in this ramps it up quite a bit if that was it. It's also really short compared to the previous ledge. Well, they don't have to be equal, right? No, they'll be pretty equal. I mean, on the whole, if you see an S curve and you see something like this, generally speaking, this is, again, on a downward trajectory, sure, but this is still just a wave. So you're going to have like lengths of the wave. Like this particular guy is going to have a roughly 50-50 cross where this drops through the creek, probably like right in the middle between the 2 points right here. And that's, again, means that this wave is roughly equal to that wave. Not exactly, it doesn't have to be perfect, but it's usually pretty darn close. So you don't have to speculate very much about it, in my opinion. The best timing estimation, in my opinion, in the market is sine waves. From what I've found, it's the only thing that's semi-reliable. And even that, you know, and then maybe cyclical stuff that happens just because of quarter systems and whatever, you know. So even that, it's like, well, this would indicate that you're missing kind of that move up. So you could imagine, like, if this does do this kind of lower low here, yeah, there's a possibility it doesn't go very high. But notice, again, the elevation of this trend. And when we see that previously, it comes back up to hit it, yada, yada, yada. You can kind of take it from there. This would mean that there's a strong possibility this is even like a really massive push up. There's a lot of places it could stop, 24.16, 23.19. But one thing I would say is that it doesn't seem very likely that it wouldn't happen at all. Okay, so I'm of the opinion that if this is going to do that, that it's actually setting up quite neatly for it. Maybe this is the one, because this one's a little bit lower. That could be it right there, like 24.50 or something, just over this top here at 24.27. I'd have to go back and see if there's some other reason. Maybe there's another level there. Maybe this guy. This one looks pretty good. Yeah, maybe that level. That could be a stopping place as well. It's not enough. Like I'm going to tell you right now, it's not enough. It wouldn't get you to that top, which means it still leaves that open. But it could stop there. You know, if it were to go up, that actually makes some sense to me too. So I wouldn't mind seeing that stop early, right around 24.50s. But it doesn't ultimately reach the point where I think bulls are trying to get back to and bears really need to kind of prove. So I don't personally care if this drops again. I don't think it's going to just drop off the edge of the earth. I know some folks are going to say it's going to just jump off the face of the earth. You don't know, Booksy. Tomorrow they could announce this or that and it's all over, man, you know. Well, yeah, that's always the case in the market, you know. You could always have something happen that just completely throws everyone for a loop. Most of the time, things are fairly priced in, and the structure's there because of what's coming down the pipe. So when I look at this, I'm like, yeah, that makes sense. Either stopping at a, and again, I think this is pretty bullish. I think this is a really steep wave. This is very flat, you know, and the direction here on this guy is already pointing. See how this is like pointing low? And that's the S-curve direction. And the direction on this guy is pointing high. It's like much higher. Maybe not as high as I have it. Maybe like right here. Yeah, something like that. And it's high. That's not low. That's not like the other one. I think that would be a good place to have like a hook. This would make a lot of sense to me if it pumps right back up into here, into this pocket. Yeah. Now I can't guarantee anything. That's not how the market works. But that would say that like 2480 seems very likely, potentially up to 2570. I know that's a dollar difference, but it is what it is. So GME, I'm still thinking that's possible. Well, that may be true, but everything's red today. Who cares? You know, don't call it Turnaround Tuesday for no reason. We don't know what we don't know. You know, bad news begets bad news, yada, yada, yada. I don't know. Sometimes this is just exactly what it looks like as a technical play, which is a flush here. And that's probably true. But I would just urge you to kind of consider the bigger picture and think that this is like a wave up, right? It's narrowing. This could be a wave down, and then you have another wave back up. And I think it makes more sense that way, by the way, structurally speaking. When I looked at this earlier in the morning, I didn't use that comparison up here. I used a, so you might be wondering where I got this line from. It doesn't look the same because I didn't use that. I used a rough estimation of what I think this wave is and where the breakdown is. I'm not positive, but this is where it dropped through on the rise. So I was like, well, you know, if it, and actually it looks kind of off now. Should have been right there. But I may have done this on a different chart, so I'm not sure. Like a different time frame. So yeah, that's basically where it is. Yeah, that's correct. So I was like, well, that wave up breaks down here. So the next wave should have a defining kind of moment on Thursday. Meaning like if it's going to go up, that would probably be the best time for it to happen to finish this wave. So I'm seeing this as like a structural compatibility with what we're seeing on the other potential here. Hey, Imogen, stop. Cat's going crazy. It's life. All right. Yeah. So this actually looks like it would hit kind of early Thursday. And then that could also just be a pivot. So I want to be careful about that. That pivot is on Thursday though. So we may be thinking like a Thursday into Friday move if it pivots there, which means that that would be a place where you'd have the bottom and then it would just break and go really hard to the top, wherever it's going to go. So when I look at AMC, I was looking at the same exact thing. And I was saying that there's a pretty concise setup. It's very similar. There's a similar build out. This is a wedge. The 618 retracement on that leads you right back to this drop ledge here. The 618 takes you right back up to 364. That's at the moment. If it continues to drop, it would change. But all that is a bearish retracement on, or excuse me, on this trend. That's not unheard of. All right. All they've been doing is making lower lows, and lower highs. So if you consider it as a retracement, really not that far-fetched, because ultimately, like, if this is going to continue to go down, this would make perfect, look at this, it looks extremely overextended. Like, yeah, maybe it goes up, you know, if we were looking at this from a bull perspective, but it already made the weakness, it already pushed over that trend here. What's up?
When I come back, can we play?
I don't know yet.
Right.
All right. This already drives to the upside right here. So for AMC, you can see that technically this has already punched it, right? It's already kind of a UT in reverse, We call that a spring. That directive back down, it almost, again, it's like, I look at this stuff, I'm like, yeah, if you flip the chart, everything becomes kind of painfully obvious, to me, which is that first stop's going to be right here at 325 to 330. So I'm not trying to read into it what's not there, that this doesn't have some kind of reaction, or it has a reaction just because I think I'm imagining it, or, manifesting it or something stupid. That's not it. It's a simple read of the chart, right? Even from an upside down perspective here on AMC, I would suggest this is clearly like that breakdown, right? This is the wave cross here to here. So I'm looking at this point. I'll show you what I'm looking at. I'm looking at this point right here, the drop ledge. I'm also looking at the rebound right there. And then in addition to that, you could say as an extension, I can also take this top to this top and look backwards and suggest to you that this is actually a wave cross right here, and it is. And you can see that walk down where the breakout is. I'm in an upside down world right now. If you're wondering, I'm looking at AMC upside down. So for whatever reason, you're like, what are you watching? This doesn't look like AMC's chart. No, it doesn't, but I like to flip the chart sometimes. So hold on just a second. My cats are getting into something. Oh, boy. Been one of those mornings, I think. Yeah. That's funny, Chuck. I generally agree that AMC is a really rough stock to trade because it is bearish. Don't get me wrong. It's been bearish for a long time in a lot of ways. But I'm also of the opinion that that's precisely the time when you want to be bullish, is when you're looking at the chart and you see that disconnect between what's happening, what people are thinking, what the fear factor versus the technical side. And again, I've been proven right about this more than once, and I don't want to be a jerk about it because it does sound very arrogant and egotistical. I am what I am by the grace of God, and that's it. But there was a very clear and evident push that was incoming to $4, and that was a 50% move. And I'm still hearing people say stuff like AMC never goes up, man. It never moves up. Look, it was there. I called it out. It was there for the taking. When people were being super bearish, saying the stock looked like garbage, that's when you want to look at it and suggest, well, yeah, it may look like garbage, but there's something going on that's changing. And it looks like it's changing direction in a way that it can't simply just keep going the way it's going, right? There are some times where there's an out, and then there's other times where it's like, there's no out. You got to make the move. The same thing happened when I called for $14 when it was dropping down into the 3s and 2s in May. I'm not going to be bashful about the correct call outs, the big ones, because the big ones matter more than the little ones. The little call outs, I miss them every now and then. It doesn't do what I think it's going to do. But those big call outs, when the macro chart is doing stuff and it's going the direction that it's going, those are things that you got to pay attention to. So I don't really want to argue about it. I'm not trying to argue. I'm just saying that I agree. I'm listening to your comment. I agree that AMC is a rough one to trade. I don't agree that it never goes up. I think that there's people that think that it just doesn't go up, but they're not playing the right trades, and they're not playing it like they would play any other stock. So they're basically just waiting for that huge move and nothing else. And I'm not going to apologize when I say things like, hey, you missed out. Sorry. Because there are people coming on this channel weeks leading up to that $4 move that were just basically saying, you're always wrong. This isn't going to happen. You really think it's going to go there? Blah, 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 blah. This stock's going to keep going down. It's like, okay. That's your opinion, but one of us is trying really hard to do the TA about it. So just like pay attention. That's about as arrogant as I'm going to come on this channel. Like I'm not going to be bashful about saying like, sorry, not sorry. Last time this happened, this kind of rising right here, you got this massive corrective move. And by the way, this is a falling, right? And it was black and white to me, like it needed to happen. To other people, you guys are like, no, it wasn't black and white. You were calling for like 4 different numbers. Yeah, but they were all around $4. $4 was the one I was saying early on. It didn't happen early on. I kept saying $4. Wait for it. It's going to happen. It has to happen. But why? How do you know that? It's not me making up stuff. Not me, like, again, trying to manifest some garbage or something, I'm not going to go lick some rocks and tell you the future here, but I'm saying that like this was clearly in the chart. And I'm telling you right now, this potential for another corrective move is clearly in the chart. So when I flip the chart upside down, it's like, yep, 331 seems pretty darn likely. Like that's almost inevitable at some point. If it didn't go that high, I'd be pretty surprised. If it only goes up to like 325 and it fails to kind of puncture that again, I'd be a bit surprised. I would. I wouldn't be like, oh, it was all wrong. I got to throw the baby out with the bathwater and never do TA again and wash my hands of it. But I would say that, yeah, that was a surprise. It almost feels more likely that this is what's going to be met, and we're probably doing like essentially like a large M cross. Now, this is strange because this is almost, if you look at this chart upside down, this is almost like what we're talking about right here on AMC. Isn't that weird? But this rise right here with this potential build out in an S curve, we're basically saying it may go down. Yeah, it may need to go down. But once it goes down, right, we may get that rise. It looks correct. And it times out right, and the build out is correct. And it goes to a necessary target. And AMC, it's almost the opposite. You have a double M, right? But it's going the other way. And this is iterating downward. The chart looks like it's going up. But again, this is iterating down in the same way, right? So when we talk about this as like retracement levels, that's why I flipped the chart upside down. Because I was like, really from a bearish retracement standpoint, if this went back to 380, it would make sense. And 380 is the creek hit from the bigger creek. We talked about 380 before. If this only came to like 360, it also makes sense because that again would be a widening here that could lead to potential up or down, right? Across here that may need to happen on a bigger picture, on a bigger scale, and that's probably what will happen. If you look at it upside down, it just looks like the same thing this smaller one's doing, but bigger. I don't know if you guys can see that super clearly. I know my charts are messy sometimes, but this right here, this motion right here, it really is like the same. This really is like the same thing, but just at a slightly different scale. I don't know if y'all can see that, but I'm going to try to bold it for you. And then even bigger than that, you could go out further and say that this is actually the same thing on an even bigger scale here. What the? Yeah. That's what I'm trying to say. Like, fractals are just behavior patterns. They just iterate and iterate and iterate. They keep doing the same thing over and over until they can't. So do you see that motion? This micro right here, this like M cross, it's going down. Remember, this is upside down land. If it generates another one, then it has the same drop here, but it makes a quote unquote higher low, which is really a lower high, right? We're in upside down land. It breaks out and then it rises back up. It goes back and it meets the other bottom, maybe even going above it first. And that's what I always typically think, because I think it's going to drop low and then have because remember, in inverse land, this is like a spring motion down to 230. And then potentially it comes back above it later in August. That's where it makes a higher high. It's a little bit backwards because like right here, it's making the second advancement actually goes farther, right? 1, 2, and then the second advancement 1, 2 goes farther. That's the same exact thing that we're talking about on this. So the small guy extended into the larger picture gives you a really simple wave cross, a double M shape up, but this is exhausting itself. And then again, look at the largest picture and you can see it's the exact same thing. It's like no different. It really isn't any different. It's almost like, it's almost painful sometimes to see this kind of stuff because you're like, man, this market, it really can be that straightforward, right? Here it is. Well, couldn't that mean that there's like another drop here and blah, I mean, I don't know, maybe. How do we know what the timing is on it? I don't know exactly, right? But I do know is that if it doesn't happen here, it's going to be shortly thereafter. There's not really much else space-wise to talk about. You know, we can go into this over and over and over again, right? But then here's the great part about it. If you like this iteration motion, check out this part. This is the best part, right? This is the best part of this behavior pattern. This is the part of the behavior pattern that's going to cause so many people who think AMC's dead to question what their life is about. Maybe it won't be that severe. This is the best part of it. Once this reaches the pinnacle of this M shape, this squeezing M shape, what happens is it bleeds back the other way to go check things that were left unchecked. This motion right here, I'm going to go zoom in. This motion right here, this is motion that takes you to like 350, you know, that particular drop, it's the same motion that took this thing to $4. It's the same motion that's going to take you on the macro back to this guy way over here, this gigantic one. It's the exact same motion. Like, it's no different. It's just bigger. It is exactly the same, y'all. Like, it's baking into the recipe here the precise ingredients that you would need to get back to this motion right here. Now, we can go forward with that and say, hey, man, that's great and all, and I like the way it looks, but how do you know it's not going to do something crazy and like go way, way low to like $1.50 or $1.90 or $1 before that happens? Well, I don't know, right? There's some things in this world that, in this kind of TA world, that are pretty predictable, and I would say that this is one of them. Like, it's very likely doing the same thing because this is the behavior pattern that's being used, right? Notice that this drop right here, I need to kind of highlight this for just a second because we're talking about iterations and it's sometimes easier to see it upside down, right? Notice that this drop right here and the second drop make perfect sense if you think about them as complementary to what we're seeing behavior-wise on the other. This squeezed up into a corner. Sacre bleu, you're right? Oh my gosh, it's the same thing, yeah. This squeezed up into a corner, right, until it couldn't anymore, and then it goes this massive correction, which by anybody's like account, even though it's not like the biggest thing in the world, it is ultimately like a bit of an SOW. It does come above this particular level. In extended hours, it went a bit higher, and we'd have to question it. It at least suggests that 1126 or 1170, whatever it was, I think it was like 1170, is not necessarily the biggest top. In this particular example, that motion right there, then looking at this, you're just like, oh, it's just an M cross, right, of sorts. There's actually a 1, 2, and then a 3, 4. It's probably this. And I don't know if it's over. Maybe it's over. Not sure. I don't know how to read that last part. I'd have to kind of go through it. I think it's iterating again, so I don't know. That's a tricky one. But that motion right here where it did this massive quote-unquote drop, we're looking at it upside down, which is a pump. and then it M crosses up, it designs for itself a place to return to later that's back at the top. Essentially, it's triangulating right now some future date out in, again, I'm going to say August, September, because I still think that's correct. That's where the triangulation is going. We see that there's a similar motion here, but this one doesn't triangulate as high, right? So this is one where you have a cross up that doesn't triangulate quite as high, and I think this one's a bit tricky, but this is the one that I was like, I think it's going to go back to 4. It's the same motion, you know, overall, the same like pump, pump, pump kind of thing, where you've got this push, and then another push, and then it fails right here. That's the change of character that I was saying when it went the other way, when it hit that bottom, and it was like, no, it didn't do the same thing that it did back here. And then it goes immediately back to this really high place that it had sort of marked off on the way up, and it did. It marked it off. I want to say sort of. It definitely marked it off. And it does this bleed down, right? We haven't done the bigger bleed down. Why? Because it's avoiding it, and we're iterating again. So now we've got another one right here, right? Now you might say, hey, man, that's all great, but don't we want to see on the big picture this change of character? Like right here, don't we want to see it try to go down again and fail? Could it be that that's what this is that it's trying as a hook and it just can't do it and eventually just bleeds the other way? You get this massive bleed up, right? And it doesn't actually have another low. Well, that's where we get into like the nuance of reading tea leaves, technical leaves. Where I think there's a macro pattern that's playing out, but then we don't really know the ending of it, because in most ways this is like part 1 and then 2, but it keeps not finishing 2, if that makes sense. It's like part 1 and then part 2 goes back into part 1, and it's just going to keep doing that until part 2 actually finishes, and that's where things get a little bit confusing. Now you see the same thing in the 2020 model before it had that huge melt up, and it's basically just never doing part 2. Like there's always like a part 1 kind of thing until you get to the end. So it might be tempting to say, well, you know, what if it just hits $3 again and it just does the same thing, but it doesn't go up? But I think again that misses the overall squeeze motion that has happened here, right? Which is that you get this kind of repeated pattern, and there is a way to kind of track it into the top, but then we're now in a range that is pretty much just a giant macro range. If I were to look at this even bigger, I'd probably see the same thing. And this is where I go into like macro theory. I don't want to get too crazy on this, but this is the same thing. Like I'm trying to help mitigate expectations perhaps for some folks, but all of this comes back to like this guy over here and that motion up, and that's the double top motion that happens after the break. It's no different. I mean, it's exactly the same. So you get this massive drop, and then there's this M cross, right? There's a sign of strength, you know, and there's this M cross over that generates a creek down, and then it goes up into this other double M top, which is a spring, and then you melt backwards because it left it open. It didn't check it. This has happened on the current time frame right now. It's already happened here. We're just wondering, like, where does the double top portion go? And I think we've already made one. That's the first top when we came down to 245. The second top probably is going to test the bottom again. It might go as low as $1.90. We've seen that. But then look at the big picture. Is that not exactly the same here? I can't even like begin to like stress how similar that is. If not exactly, it's the macro behavior pattern. So what are you trying to say, man? What I'm trying to say is all of this information that's happening in this bottom is really, if you look at it carefully, all of this information could be thought of, right, in a very similar way as the same exact thing on the biggest possible picture that you have here. So, well, you're saying that it's going to go to the moon then. That's where we get to then the final nail in this whole situation, which is this actually a sign of strength or not? And then also with the shifting chart, does that mean that we actually get to go really, really far, or do we stop short of going really far because of the chart shift and we only get up to like $45 at most, right? And the answer is, I don't really know. Sorry. The answer is that this is the reason why I've said repeatedly that this wave, what the? You guys are like, what the? No, I'm just kidding. No one's saying that, Booksy. You're just pretending like you're in a room with people. Really, you're just talking to a microphone by yourself. You might say like, wait, that's the wave, man. You just did it upside down by showing us iterations that were unfolding in behavior patterns. Yep. I think the biggest problem maybe with all of this is the not knowing exactly where it stops, right? When I get to August, I am nervous, right? Part of me is really nervous that there's something we're missing. And I've identified it a couple times, which is this piece of the puzzle that seems a little off, which is you're missing maybe the idea of like a pivot that you don't actually have yet. I don't know. And I know this is going to sound really bad because you're like, well, that sounds like garbage if this is the case. But there is a thought in my mind about August as a low and potentially like leaving way later versus August as a low and leaving now versus February 2026 as a low. Imagine the humiliation on my part. Everybody unsubscribe. If it ends up being a low instead of being a high because it's like some kind of a pivot, that would be insane, right? Part of me wonders with the current setup because it hadn't built out the strength I don't think needed. It looks bad to me. It looks like it doesn't want to get to the top. And, you know, if we look at the iterations, it's like, well, why wouldn't it get there? This looks so easy. It looks so obvious, right? You just said it a minute ago. Why wouldn't it get there? It doesn't make any sense that it wouldn't. If this is indeed going to bleed up this way, then why wouldn't you just hit the peak and then keep going, right? And like build out even larger. And the truth is that it's complicated. There's some things about this that don't really make sense. And when you get into this iteration mode, they become, how should I say, nebulous, like fog. Like nothing to really grab onto. Where you're really looking at this like there's a lot of these anchors. Yeah, I can grab onto those. I can see 11, 12, 50, something like that. I can easily see 1960. When it gets to getting to this point where you're like, how do I get back down to this level? That's where things get really odd. It presupposes some kind of bigger picture, maybe problems that you then have to kind of basically deal with. And I don't want to get into like any more of this macro stuff today. But my point in saying all this was that there's a very real behavior pattern that's been playing out quite a bit on AMC. And it's weird because when you flip it upside down, it really just boils down to this pattern right here, the same one that we've been talking about, right? Like flip the chart again and you see what I'm saying? Like that's the exact same pattern we've already been talking about. So it's nothing new. I just presented it to you upside down. But is that not the pattern? Yeah. Is that not the pattern that you think might be playing out? Yeah. The iterative pattern on AMC. Yeah. There it is. So I'm looking at it right now, And I'm saying that, look, we've already kind of seen through the window. We know what's on the other side. There's a pattern, a behavior pattern that the operators have been using, probably Vanguard and BlackRock. They're the two biggest operators. They've already been using this pattern pretty religiously. It's still there. It's there on the macro. It's there on the micro. And then it's there on the midterm. Like, it's there everywhere. You can't escape it, right? It's like taxes. You can't escape. So you, death and taxes. So you look at this and you're like, all right, man, let's make this more like homely though, right? What then makes you think that this could go up? Perhaps the question is like the 460 or something like that. What makes you think it could do that? If you think that this is so rigid, well, it's not that complex in some ways. Here's where the rubber meets the road in this particular instance. When we see 460, what we're probably seeing is just like on the macro, we were just looking at it. We were just saying like, hey man, on the biggest picture, you can see 45. But you said it might stop at 20 or 1960. Why would it go to 45? Well, it's there. That's the same thing here. The question is it used right now or not? And that I can't answer. I don't know. That's why it's a little nebulous. So this idea of like, well, this could bleed up to here, it may seem like that's the easier answer, and it probably is if you're going to go back up. But there's certainly a possibility that it goes ahead and fulfills the 50-50 here, and pushes up towards the top. Why not? Why could that not happen? Well, we'd have to answer the question based with another question, which is, where you want to go after this? And do you have enough ammunition to get there? This to me would look like an inverted head and shoulder. Certainly would be a good trap. And I've said 460, but I've also said like 417, that region right there. It's easy enough to see why that could be a very efficient bull trap. And that would be a really good reason to go there. If you're just trying to get like exit a position again and then get bulls kind of stuck. It's also hook value. It doesn't beget further price action. There's already a trend here that wasn't retested per se very much. That's the first M cross. I think when you look at it upside down, it just helps to kind of clear it up. It's not that it gives you the answer, but it does clear it up, because just like here where you have, I've got this guy, right? I've got this guy. It could go there and stop. It could go to 20 and then go the other way, because we don't know if it's going to build out a bigger M shape. Well, that would be crappy, wouldn't it? Yes, it would. But is it possible? Yes, it is, because just like previously, we just talked about, I just showed you on the small picture. If this, for example, took that route, you might expect something like this to happen, where you back up. You may even go again here, right? But then ultimately, the bigger picture is that this is not done. It goes all the way back down. You guys are like, this sucks, Booksy. I don't like this. I don't like this. Yeah, I know. I don't like it either. But this may be very well what happens. Well, when do you know the iterations are going to stop? How do you know? You don't. This is the reason why people thought it was going to keep going when it got up here, right? And not create like a larger distributive end top. Now, I don't mean to say that it has to go down and make like radically new lows, but it might. I've talked about it before. I've said many times that this is definitely on the path to zero, or to not zero, but to one, potentially. Well, that doesn't make me feel good. No, it doesn't. But it's there, I don't really need to, it's not personal to me. Like, I don't need to prove anything to anybody in this particular way. I'm like, yeah, I mean, if it does this, it would probably look like this, this would be like a bigger iteration. This is where I run into problems. And I was telling you guys a couple months ago when I was looking at it, maybe a month or so ago, not even that long. I'm like really nervous that it actually goes to $1, because there's a possibility this cross right here results in like another M. So it doesn't actually go up again, which is what I've got drawn there. Totally possible. So I originally had thought 45 was a given, but then I was like, it doesn't really hurt to do this. And at the end of the day, this then becomes like another version. It's like a really frustrating anomaly because it's essentially like a shrinking version of the bigger picture. It just basically does the exact same thing but smaller. It's extremely annoying. It is. But all this is right here is just like a smaller version of this big picture. And then it does the exact same thing. This is my biggest concern for AMC. If I'm being honest about long-term possibilities, that's it right there. I would say this is probably a little too short. It should be longer. That's it right there. So it's going to go to $1. Hey, never say never. Technically, is this above this creek? Yeah. And that's the thing about it is like, it is a bit of a string along. And I think that's the point. I think there's this idea that you're kind of getting strung along and you get frustrated by that. I guess that would be the point and I'm trying to make. But if this is ultimately what I think it is, it's really just a smaller version of the bigger picture. And that brings us to this question of like, what are these little iterations, right? And they're really just bigger, or they're just small, or the whole iteration is made up of itself, right? So you get this kind of version of itself over and over again in different pieces. Yeah, when's it going to stop? I don't know. This is really common. This is actually extremely sensible in some ways. This right here, this guy, because it would have like embedded in it an M cross that does technically jump the creek, but then it comes back down really low to check it before advancing again. And it doesn't ultimately go as high as it needs to go because it doesn't have to yet. It's an M cross. Well, what makes you think it goes lower? If that trend is set up really low, this could come down further. So you're basically just delaying the inevitable. Well, sort of. Yeah. That's one way to look at it. This is 3 years old, guys. 3 years old. You want to know where that's appeared before? I'll show you exactly where that showed up. It was one of the first places I ever investigated it. And it's very old. And it made me ask a lot of questions about what I suppose might happen on AMC. And at the time, I don't think I answered those questions honestly. I think I was really looking for a bullish answer, not necessarily the right answer, What this answer is this is how AMC often distributes, right? This is not exactly 1-to-1. This is very similar though. And a lot of it depends again on how far this goes. This is the same exact thing right here. So here you have a bullish break. There's a drop. We could put it in a way that suits our style, if you will. I'm not going to include the second part, although there is an ear there. I'm just going to leave it alone. There's actually like a little secondary spike right here, which would be like the paw, or the first ear, and then the second ear, and then the yacht, so on and so forth. But this is basically the exact same thing. You have a build out that generates another version of itself. And then notice that when it comes to the very end, it does have a breakout and it comes back up. In this case, it comes back pretty far. And I'd looked at this before, and I've talked about this quite a bit in the past because this was one of the ones I used in March. This is the first time I really used, I guess, the concept that it's a distributive pattern and not necessarily a bullish pattern. And it's actually just part of a bigger pattern that's the same exact thing. It's not by itself the end all be all, but this is the same pattern right here. Notice that this doesn't come back up to it on the first go. It comes pretty high. It really comes to that drop ledge, and this is why I've been arguing that the drop ledge is actually quite low. It's when you look at the shift, our drop ledge is at $20. It's not actually up there at like 35. It's at 20 now. So the first one only comes up to 20. Now there's more to it than that. We can go into like, whoa, we here came up to 14 and this doesn't look the same. No, but the bigger picture here is still like a story of, I mean, look at that. And that's where it leaves right at 20. The bigger picture here is still a story of just wave crosses. Like at the end of the day, this is just a big S-curve. And then it's ultimately like just a gigantic creek cross. Not even gigantic, it's not that big. But ultimately it's just a creek cross right there. This is the same structure. So the first push might seem like this was going to break out. And this is kind of where we'd be right now, right? It's like we just did a backup and then we would be coming back down. And we may even go a little higher on the backup. We don't know. We'll come down to a spring. You might think it's going to just break out and go. It may not. But you could also look at this as the backup and say, oh, it came down and it didn't have a spring. I think that's probably more accurate in this case. This is an LPS. So it does have a change of character. Key difference, of course, being this already made a low. So again, you have to kind of take it in context. This had already made a low. In our case, we came down. We didn't make a low yet. We hit like above the top. We're trying to push back up. Again, it would be like saying this is like the $4 push or something, and we might have another push. And then we basically go into like a spring and then jump over, go to $20. So the reason I'm bringing this up is because when you look at our current setup, I'm like trying my best to be very optimistic about it. But optimism only gets you so far. The chart kind of has to show you that that is very likely. So I do think this is an iteration. I do think it's going to have a melt up. I do think all the other stuff I said is probably true. It's probably going to happen. And it's going to be a lot of fun, at least for a few days, maybe a month or so. We might have a lot of upside. But at the end of it, the question mark becomes like, where does it go? You know? And it would be easy to look at it and say, well, if you only read into it as, you know, kind of this like macro double bottom, then this should be done, right? And like it should just take off and it would go from here. The halfway point would be around 650, which is again weird. It's very low in my opinion, but it would go from like 2 something to 6 something to 20 something. And then I guess if you were saying like it was on the big picture finished, like it had already done that kind of double bottom motion, then this should just go up all the way to into February or March. It should just go all the way up. But one of my concerns is that that's not actually what's going on here. And I've mentioned this enough, I think, at this point that I can just say it now. Because I was saying that I thought we would get back to near $45-50 by February. But that, again, that assumes that that's actually the bottom, that there's not a bigger picture cross-up happening. And that's where I got like a little bit stuck. And I honestly don't think that I think potentially it's true that this isn't going to go anywhere until 2027 or something ridiculous. When we looked at GME, it was very similar. This is too long. But we looked at GME, it was pretty similar. It was like the motion itself, oddly, if it builds out a certain way, it can't leave until like 2027. And maybe even then, there was even further debate, I think, that I was having on where does that go. So we may not see $30 to $50 until 2027. And I mean, just saying that because it doesn't mean it's going to happen, but it's like, it's there. You know, part of me wants this to be right. Like that there's clearly like, yeah, it's there. It's done. It doesn't need to go back again. The wave itself should be finished. I don't think that's not true. We've talked about this before. There's a lot of possibility going into 2026 and so on and so forth for this wave to be done, maybe even as soon as February 2026, maybe as late as June 2026. There's evidence that that's where it should be. But there's also evidence that you have what we see here is like an initial cross-up point, and we're not actually done with the distribution yet, so to speak. The sell down, it's really more of an accumulation in the long term, if you think about it. Yeah, so this is like M1, M2. So this is M1, M2, but then you're missing the last bit here, the real like final bit. It'd be like saying M1, M2, and then this is the final bit. So I know that's a little confusing, but it's like if this is M1, M2, and then this is like the final bit. So there's a double top motion. This is actually just part one of 1, 2, and then 3, 4. It does add up quite nicely if you're going to do a really long-term accumulation. It's really frustrating at the same time. But yeah, it'd probably be like triple in length, roughly to this right here. So you'd have 1 and then 2, roughly, and then 3. So why talk about all this crap today when we're just looking at the micro? Because it matters that this is the same pattern. It's the same iterative pattern right now. That's why I'm not convinced, even though it's dropping. I know what it looks like. I'm not an idiot. And you might be saying, well, that's not a good sign for us if it just keeps going up, right? I can't tell you guys what to think. But what I can say is that in my point of view is that it looks to me like the same thing that we've already experienced a number of times, where you're going farther than you want to go for sure. You feel like it's dying. The same thing could have been said here at this point, when it was dropping low. The same thing could have been said here at this point, when it's dropping low, so on and so forth. We're missing some things. Like, obviously we need to see this change. It hasn't happened yet. But I would suggest that this guy right here, that this and this are probably the same in terms of iterative motion, and that we're going to get a rebound and a top, or a rebound, a higher low, and then we're going to push out to try to meet whatever we need to meet. So I'm looking at it like, yeah, that's the right spot. This is that extension up. So it's going really low. It looks very bearish, but it's not actually as bearish as it seems. It keeps peaking above the top. It looks like it's going to fall off a cliff. It's probably going to go lower than expected, right? Which it is. But this is also like a sign of weakness anyways. So the writing's on the wall regardless, So how far down does it go? I don't know. But it doesn't really matter at the same time. You guys are like, what do you mean it doesn't matter? It matters. It matters my bottom line, Booksy. I have thoughts about how far it could go, but I think in the end, you're probably better off just looking at these early levels. One's right here. This is where a cross-up happened. Honestly, this is probably the most likely place if it continues to drop, which is like 285. And it is quite low. Retracement-wise, that's about as low as I could see it going reasonably. If it went lower than that, I'd be really surprised. But that would be like, what? That's really low. That makes sense to me if it's going to drop. And then I said it before, like 296 or something. I think I had on the chart 293. I don't know, man. I had these on the chart, and I was talking about 290s when we were at the top, because there's just a lot going on here from that standpoint. Is this an SOW? Yeah. But all that really means to me is like, I think it's a spring, is what I'm trying to say. I genuinely think this is a spring motion. I was way too early last Monday. I said I thought it was going to do the same thing like last Monday. I was like, I might go a little lower, but then it's going to rip. It was way too early. But I seriously think that it's a similar situation right now. You guys are like, you suck, Booksy. The world's going to war. It's not going to happen. I'm not saying it can't go lower, but I'm telling you guys, this looks like a spring motion to me. I think it's going to react strongly back to the upside. I think that's part of the model here, right? And then I think at that point, yeah, it might be as simple as it only goes up to 340, 331, 345, and then it dies again. It may be a little bit farther than that. And yeah, based on the fact that we have that setup, that hook, this come up to 415 reasonably and still be bearish. It's not impossible, all right? It's just timing. And the timing of it would be different if it did that, but it wouldn't be ultimately price-wise any different. Like you would still have the same markers in place. So I'm looking at it right side up, upside down. And in both cases, I'm like, meh, this seems right. You should be coming back up to near 340. I'm looking at GME. I'm like, yeah, this seems right. You should be coming up to like 2470. I'm looking at SPY thinking, yeah, this seems right. You should be coming up towards 607. So what happens tomorrow, Booksy, when it drops off the face of the earth and it dumps all the way down to 580 on SPY and you're wrong? And I don't know, man. Like, I would just say this, and I think this is fair. I really do. I think if you're listening to somebody and they're like 100% convinced about anything, they're probably not genuine. Like, I'm not 100% convinced about this, but I do think that it's very likely. But there's a difference between that and being just kind of earnestly like, I really genuinely think this could happen, and it doesn't happen. You get to decide whether or not you extend, an olive branch and say, all right, well, he messed up. Or you can just unsubscribe. You guys are like, I've never met a YouTuber that talks about unsubscribing as much as you do. I'm a big believer that people have agency. They make choices. Sometimes those choices are great choices. Sometimes they're not great choices, but you get to live with the choice. If you're not interested in the information, then why would I try to like convince you otherwise, you know? If I make call outs and they don't happen, okay. You know, there's guys on here who've been following me for years, and for whatever reason, they never leave, even though they think I'm always wrong, right? But that's their choice. I'd prefer if they just leave at some point, because it kind of gets old to me to hear it. I also know there's people who think that I'm always right, and I'm not. And there's just the same kind of thing. It's like, it's levels of extremes. I can tell you right now, this to me looks bullish. I don't think it's a bullishness that lasts very long. I think it's a very short-term bullish on weakness that's really there to just kind of prop you up so you can get out of positions. And I think that's probably all you're going to get. If you don't take the opportunity, or if you think that it's going to keep running, you're probably going to get screwed either way. You're not going to be happy with that. So I'm just trying to present this as, hey, this is likely happening. It's a good time to maybe exit some positions. I'm going to go back to what I said at the very beginning of the stream, because I don't think I ever like really addressed what I was talking about with this uptrend. So I noticed there was a trend I had drawn again from the bottom. This is like the very first thing I said when I started the stream. Some of you guys waited 2 hours to hear this. There was a trend that for you guys are the real heroes, the ones that waited around 2 hours to hear me gab on about the market and GME and AMC. You deserve a pat on the back. At least a pat on the back. So that low that was met here on the 16th, and then that low that was met here, I was talking about how like it was right to use this horizontal ledge as a drop ledge. Like, it's a very good way to do it, and it's very accurate. It's a very important ledge, and we're there again, right? We're dipping into it again. So you can see how like a similar breakdown Could be something like this where you have a weakness and then you drive the price back up to above like 330 or whatever. It's slightly different. It's a little wider, right? What I noticed is that I took that parallel and I copied it, and I noticed that that parallel is running through all of these bottoms pretty nicely. And I checked out where that April 2nd one was, and this is where it is. It's strangely, again, it's like through that bottom goes through the April 2nd. It's right where we are right now. So one of the things that I was thinking about was that maybe it does set up a little bit higher going into July 9th by establishing itself a ledge here again. It's already used it once. So it did this previously again back here on the 2nd. It would make sense to pump up away from it, just like we did here going into the weeks right before and then drop down. You can see a very similar motion. It's already done the SOW, so it's already ready to break down. But it is kind of a curious thought that we may not actually come back down to the same level. So that level is down here at 285, which is very similar to what I just said. Like, that would be the lowest, right? But it may very well be, depending on the strength of the market and what we want to see, I guess what the operator wants to see here, that they don't actually drop 3 until then, and they use that as a leverage point, instead kind of pinning you up into a corner here, which would probably be a lot more effective if you're just trying to sell into weak hands, or, you know, basically you're trying to like get people to think it's going to go up. You can kind of camp it right here. There's a good spot. I'm not saying it's a very fun thing for us, but I'm just thinking like an operator would. And to me, I'm like, yeah, if you pumped it up and kind of fake broke out, if you ran it up to like 350 and then dropped it back below, you could probably camp out here until July 9th and just do a secondary distribution. And that's very similar. And we were talking about the M shapes. Now they're often like pretty similar in length. Like this guy, I'm going to skip the movement down. This guy, and then having like another wave, and then this guy going up to the 9th. You can see why that really looks quite nice timing wise. So I'm curious, there may not be this like immediate sell off like I thought. I thought it might just pump up and then bleed through and be low, because I was like, oh, it's probably going to come back to the same target. I'm not convinced of that anymore. I think there's a very strong possibility that we kind of flatten out right here instead, and just go chop into that date. And that's when the drop happens. And it actually is tied to this SOW quite neatly, because this SOW would be the target that's currently being mapped and where you're going to go. I mean, that's how simple it is. It actually would be like we're generating a target right now, right here. Yeah, that's a possibility too. That one. That's not quite as low as I thought, but that's like 289. Anyways, I think it's very possible that right now you're actually generating that downward target. Like, depending on where this is, it's going to point you to, and I couldn't really tell you exactly at this moment. Maybe I can do it if I get a little bit smaller. You see if there's any information there, like data there. Oh, there is. There's a little bit. So there already was a... And it's actually, we're kind of right on it. So there's actually a top right here, and then there's a puncture. The puncture itself might be irrelevant. It might be that it was used, again, to signal that low, so it's hard to say. But you actually have to... I always feel like I need to use both, because I'm never really sure. Even now, after years of doing this, I feel like sometimes it's like a weird average between these 2 points. Like there's a high and a low right here, and it all happened within a day, like 4-hour period. It's on Thursday, there's a high, and then I think it's right into Friday, there's a low. So it's a little confusing, but those two are actually slightly different. And I find that that's actually very often the case, and I don't know why. And it's probably not that big of a difference this time. But that region right here, is a likely candidate. And then what's interesting is that that's where it would go when it breaks down, because then you have like an inverted triangulation. So if it breaks back up, which I think it will, and I'm going to continue to say that, I think it's going to come back up above first this one at 308, maybe to like 310. And then it will probably take off from there if it does that. It should be a very simple backup and then take back off again. Once that happens, then I'm looking at these tops, right? All the tops we've outlined, including like the highest. It's not impossible, all right? But all of these tops as potential distribution moments, they're certainly there. There's a lot of little spots it could stop. But this is probably like my current favorite, that it doesn't actually break out very much here. Probably just punctures just enough to get you to think 350 is possible. Maybe even closing up there on Friday, near 350s. And then, again, I think it's probably distribution. You're going to come back down. So we may already have the cat ear. Yeah, like this. And I don't know. At this point, anybody's guess about how fast it goes down, whether it's up here or down here, it doesn't really make a huge difference. But this is the triangulation then for what happens the day of. That's the downward triangulation for what happens the day of. There probably is an upward one as well, but that's the downward triangulation for the day of. Day of what, Booksy? Well, the day of doom. No, this is basically just going to do a redistribution here. It's probably the upward triangulation for the day of the tariff deadline. Now, if it goes down first, I may actually be a little bit more bullish the day of if it were to drop early, because you might actually get an opposite reaction in that case, and it goes really high, especially if it avoided coming back up here. If it went low, you could get a really big reaction back up, sort of like an offset of this one, but like way down here. That's possible. But right now, I'm favoring this move. And then my thought is that, again, it probably doesn't look too hot going into next week. You may have like a lot more sideways for about a week. Next week could be a very, very flat week in the market. But this has already made a weakness. So that's the thing about it, is like it already pushed through that bottom. So it presents itself like it's a spring, but it's really just a wave back up to sell off again. And then that's defining that motion, that push down motion right here is actually defining the triangulation for later. So then later it goes over, and when it has that drop, it has a drop from like 318 all the way down to like 275. Puts you right on the ledge, right where you need to be to start a major sell down. And there could be some trepidation there. I've kind of just going straight down, but it might stop there and kind of ease in. This was based on what's the word? This was based on the first build out that I did. And again, because this wave, it's still possible because this technically has this massive cross here. So when this wave breaks out, that wave cross is going to be kind of weak, but it would potentially come back to that wave. It doesn't have to, and this is the weird thing. In 2020, it never comes back down to check the creek again. It never comes back to this creek in 2020, and it doesn't really come back to this one. They get steeper and steeper, and they just don't. It never reaches it. It just kind of hits the bottom and fluctuates, and then it dips below. So there's a little bit of a question mark in my head about, like, would it necessarily have to hit, I don't know. That's a good question. I'm not sure. And it only spent about 12 days in a spring-like motion in the final iteration in that 2020. So that was a really small time period. I mean, it did not take long. So if you go to like August, where we think there might be some movement. You can kind of frame it maybe around the Friday, Monday, August 8th, August 11th. Those are the 2 dates I would use. And you can see like a 12-day period doesn't take you back. Yeah, it just takes you back to like, that actually makes sense. It takes you to like July 28th. That looks right to me. So what is that right there? If that's what happens, there's obviously have to be something right there on the 11th. This is already there. That trend exists if it bounces. So that makes sense. So there's a reaction back up. Gets you back up to maybe here, this triangulation at 250. Then it takes you back down to the floor at 240, just above the 239 low. And then you break out. And that's a 50% swing around. But one of the bigger question marks, I think this is a parallel. I'd have to go back and see where I got that from. One of the bigger question marks I have is there's a little bit unanswered here, which is the big picture. I don't actually have it on the chart right now. Like the big picture creek needs to be jumped. So this particular thing is like really thick. It's like maybe less thick. So is this successful in jumping like the macro creek and holding it? Of course it is. I mean, I'm not really that surprised. I don't feel like if the math is there, if they're already creating those targets, the market would be doing it for a reason. Trying to get you to like, again, it's like anything. On the big picture, they're just trying to get to a target. They don't really care that much about the small, and then vice versa. On the small, you're not really thinking about it. You're just kind of following it like lemmings. Yeah, there it is. So you can get back down to there. In fact, this could just hit like 236. Remember that magic number? I don't know what I'm going to do if it hits 236 and bounces. I was joking about that before, but I was like, I don't know. That'd be pretty wild. Guys are like, what's 236? Precious. 236. Still playing those 2000 Lord of the Rings memes, huh, Booksy? Boil it, mash it, stick it in a stew. Yeah, I'm not a very exciting person. This 236 number came up when I did the mathematical calculation of where I thought the shift was. This is going to rub some people the wrong way if you've never heard it, but basically what I did is I have a formula 2 times AMC times 2.2636. And so, I said 236. I'm sorry, it's 226. But 22636, 2.2636 is a number that came up. So this would be like 226 right there. It's a number that came up when we did that setup where you're looking at the chart as if that's the value. The 200, it's a 226.36% chart shift in valuation that they did. And I still believe that's correct. I did the math. My math is not always perfect, but I'm pretty good at math. So I have to just kind of trust it that that's one of the things that I enjoy doing and I'm pretty good at it. So I'm going to say that I think it's right. And I've been using that number for a long time to help me with the shift values in order to understand where this might actually go valuation wise, in that it is meeting those targets, but it's doing it after this chart shift. Once APE was reintroduced to the stock, it altered the count, right, of shares, and then that count was then divided by 10. And so there's a kind of a double whammy. If you go back and you look at that, there's a double whammy shift value or split value. It's like a 9-to-5 ratio roughly that was there between APE and AMC. But then when they added it back together, those valuations would have had to been essentially average with the 9-to-5 ratio. So the share value wasn't 1-to-1 ever. And it probably wasn't going to be, even though they said they thought it was going to be, they were wrong. And I don't know why they did. But then there was also dilution during that time period of APE. So they took that 9 parts. So it was like 9 parts to 5 parts. And 9 parts was worth less because there was more shares. And they actually diluted that more quite a bit during the APE process. And then not a huge amount, but quite a bit. And then the conversion backwards had to take place right before the split. So it's not just like a 10-to-1 type thing. So when we did it, I looked at those numbers and the valuations based on what I'd already been tracking. And I'd been tracking it for a long time. If you guys don't recall, I actually had a spreadsheet. I wonder if I still have that. But I had like a combo spreadsheet. And I tracked it the whole time we had APE. I don't know why I did this. I don't know what's wrong with me, why I do stuff like this, but I just do. It's weird. It's a weird thing to do. I'm trying to remember where I did it. I think, let's see here. Yeah, I don't know if this is going to be right anymore, but because it can't find Google Finance anymore. Well, yeah, it won't work anymore. I did this a long time ago though. So I had this built out where I was using, man, I don't even know what the heck this is anymore. The AMC share and APE share, and I was doing this based on ratios, not reverse values. And then I had formulas, yada, yada, yada. I did a system of equations, essentially, and I worked the system of equations to give me what I thought was, with shares outstanding, what I thought was the total market cap value at the time. And then I was even tracking, for a while, I tracked all the deviations. Now, they're not here anymore because they don't have APE. APE doesn't exist. So I was actually using the data pulled from Google Finance is what it says. So unfortunately, that's all gone. It doesn't exist. But I was using these for understanding, Jesus, Lord Almighty. I'm looking at it now. I'm like, God, Booksy, what are you doing, man? What were you doing? I think I was tracking a standard deviation of, what in the world was I doing? This seems like nonsense, but like I know it was right. Math is like that for me. I get like really into it and I like just dive deep. Yeah, so this was cool because I ended up building out a are you sure you're not a finance guy, Booksy? I'm looking back at this, I'm like, kind of looks like I was a finance guy for a few months. It was like 12 months. AMC options ended, AMC2 options ended last week. Good. That's funny. Yeah. So what this was like a baseline value of what I thought. That's right. The whole point of this, it doesn't really matter what I was doing individually. I had these things. The whole point was to get the deviation. So what I was doing was I was getting there was a deviation because the numbers kept fluctuating. They were never the same. Like, so there was a deviation between the two charts in terms of like valuation and like where it should have been, quote unquote. versus where it was. And so it was basically like creating a moving average for myself. And then I averaged the averages. And then I got a baseline plus deviation, baseline minus deviation. So I'm basically doing like a standard deviation up and down. And then I forgot what this is. Record time. Oh yeah, I was doing like noon base as the time of recording. Anyways, close versus noon, 4-hour increments. So what I did is I charted it, and what I found was that there was the deviation average. So this was how far they were from each other on average, and then the baseline plus deviation, baseline minus deviation really was just more about the baseline value. And the baseline value mattered the most. So once I got that formula for the baseline, I ended up using that. I charted it on here, which was interesting. But I ended up using that to chart an AMC plus APE chart because I used that formula to create the actual valuation chart. That's the one that I think was most disturbing because, as you can see, when I started doing it, it clearly had a build out that looked like it was positioning itself to drop to like 2.4. And even beyond that, potentially going all the way down to 1 in the future. And when we looked back at what happened after the chart, it dropped really low and it climbed all the way back to like 2.4, which is freaky. So the AMC plus APE valuation that I did, it took months and months and months to get it down there, but they got it there. But they used a shift to begin with because the valuation was immediately off as soon as it transitioned. So the price that they wanted was like $2.40, I guess. That's what was on the baseline chart. I'm looking back on it now. I'm like, wow, I can't even believe I didn't see that before. But I guess I didn't see that before. I don't remember seeing that. I don't remember saying anything about it. I know that it was there. I remember the chart saying the AMC plus APE chart. Once I got the formula, I used those numbers to chart it here on TradingView. And it was showing like this variation between like $2 to $4, which made sense because AMC was like 4 to 6 and APE was like 80 cents to $2. So it looked kind of like an average, but it was like a really fancy average. It was like a more accurate average based on the actual numbers. But yeah, it actually was already at 240, I think, so it's kind of crazy to think about now because I'm like, that probably was all they were trying to do is just get it back to where they wanted it, where they were trading. Ooh, that makes me have a lot of questions now about shorts. Man, what bothers me the most about a lot of this stuff is like I will not get the answers. Like I will never actually get the answers, I'm not going to worry about it. I'm not going to be like on my deathbed being like, please contact Vanguard. Was I right? I don't care that much, but it does bother me because like, I wonder if I'm right about that 240 being established before and like what does that mean? Does it mean that the operators actually did have an average price of $2.40? In which case, none of this would have affected them. Because if they were doing like the arbitration, which we were kind of thinking, they were switching between the two. So they were shorting AMC and they were doing long on APE. Then their average was actually $2.40, then it would never have hurt them. How did I not see that before? I feel really silly. Like this is the closing price because it was the last day that I tracked it. It doesn't look right at first glance because it doesn't look like the price action exactly, but it is right because this is like the final moves up. and sideways, and then the drop, and that's when the conversion happened. It converted when this was at $2.40. I think I'm just taking this in right now. That's all. I'm the kind of person that I'm like really hard on myself sometimes. And I remember I remember thinking that this was probably right. Just like I think about a lot of things, like the shift value, right? I'm probably right. But you really don't know until you see it, right? So what's weird is that this baseline value, that at that time, like I would never have imagined at that time that it needed to come back to that value, because when the chart transitioned, it wasn't at that value. It didn't go down to $2.40, which I found to be kind of odd in some ways, but in other ways I just didn't understand it, because at the time, remember, it wasn't like it was easy to understand. When they did that conversion, it was super confusing to everybody. And the numbers were all out of whack on different charts. Like nobody had the same baseline value. Nobody had the same conversion value. It was super wonky. It's like they didn't tell the brokers what to do. So I remember it being really confusing. And then when the conversion happened, we didn't have a moment to think about it. It happened all at once. There was a conversion and a reverse split. And then all of a sudden it's still tanking, and you're like, why did we move so far right before? Why did all this happen? You know. The only way you would have made out okay in all of this is if you had you had to have a 9-to-5 ratio. God, I hate these. I'm sorry, guys. I'm sorry. I did not mean to say hate, but the YouTubers were wrong again. And I'm angry because I remember thinking there was something wrong. I am angry. It wasn't complicated in that the operators knew that what they needed to do was to just buy up, just drop ape as quickly as possible, convince people that it was a bad hold, and then buy it up in an accumulation while operating a distribution on AMC. And that's exactly what they did. So AMC played through the distribution, and ape played through an accumulation. And it's kind of obvious now looking back, because AMC kept up thrusting and like was clearly in a distribution. But the confusing thing about that was that ape was in an accumulation, which of course made sense. And then the variations between the two were really erratic in terms of how they were moving, which is what I was tracking. But now I'm looking back at this and I'm like, man, this was not that complex. Like, basically, these guys, this is like $6.50 and $1. Basically, what was happening is like you were pivoting. You're just playing like two sides of the same coin, and you're pitting one against the other. And the operation was clearly designed to get people to think AMC was better, because ape was being diluted. Really, ape was being bought. And I knew at the time that it was backwards. There were people that were urging everybody to get out of ape. I'm selling my ape. Like, I remember that being like the main narrative. And I remember that being like the big theme. Why? Because ape was dropping. So it must be bad. People were getting out of AMC and ape because of ape. Ape's dilution. Ape's going to be bad. It's diluting. But ape was the key. If you had accumulated for every 5 shares that you had, if you had accumulated 9 shares of ape, you would have had an average. You have to do a lot of accumulation, right? Because some people had like tons of AMC shares, right? Tons of them. And then in addition to that, when the price split, it's not like those ape shares that you got appeared out of nowhere. They took them from the valuation. So it looked like your shares is a complicated formula because they derived it from your previous values. So you weren't getting like free money. It was money that was being sort of separated. So it wasn't a simple equation of like, oh, I have 5 shares of AMC. Sorry, I thought it was, but actually it's not. Because you had 5 shares of AMC, but those were 5 shares that you had that had already had price removed from them effectively, like a drain, right? Which started on the August 22nd of that year. So it was like you felt like, you're basically losing because they took a lot of your value and you put it into ape. So your cost basis was supposed to be the same. That's the whole thing. That's what I'm trying to say. So you felt like you were losing because a 9 out of 9 out of 14 of your shares, right, were like dumping effectively. I mean, that's not exactly how it looked. Most of us, the numbers looked a little different, but obviously, because we didn't all have 14 shares to begin with, so it wouldn't have looked like that. It would have looked different. But effectively, they were like running it through the ringer to make people get out of that portion. But that really was the key to longevity. If you had held your ape. Now, this isn't to sugarcoat anything because it still dropped. Like the value was still done, back in August of 2022, I guess. It would have been that time. That right there was the last time you never came back that high again. And the truth is that would have been your average regardless, plus the loss that was made to the baseline. So what you'd have to do is take that original number, whatever it was that August, and basically divide it by 2.2636, and that would have been the average compared to the 240 that we then saw later, and you would have been right on the nose. That's why they kept saying, like, they said something really weird, and they said something about like 1096 up here when they did that offering. I thought that was so strange. I was like, where the crap does that number come from? Like, that's why I went on this tirade to look for it. I was like, that's a weird number. Why are they saying the valuation is like 1096 right here? That doesn't make any sense. But weirdly, this is even the crazier thing about this, is that if you had bought AMC but not ape, your average actually would have increased. Now, that's a little confusing, but it still was lower than where it was before. Don't get me wrong. It still is lower than that August 2022 times divided by 2.2636. It still would have been lower than that, but it would have been higher. You're basically saying it would have been much higher than here. So anything that you were buying, I don't want to say that this is the equivalent value, but it probably was similar to this. Like, it would have been like you were buying stuff at basically during the AMC stuff. So let me think. The shift already would have happened. It's like you were buying in this range right here. If you were buying like AMC during that time, yeah, it should be right here to here. Yeah, because that would be roughly the shift value. It's like you were buying an average of $12 per share. So naturally, like $12 down to $2 is like a huge loss. And then even worse is like we already had, that's just only if you had bought shares there. Let's say you only had shares there. That's the shift. You would have like a $12 average. And of course, 12 down to 2 is like a big loss. But it's worse for people who are in the chart early on because we didn't have just this area of buying. You would be bringing down averages from like way back here in some cases, or like $26. I think we determined that $26 was like the most common average or something, but that's a little complicated now too. But most of us would have had averages here, roughly 50% of the way up. Because if you bought from the beginning all the way through, your average would have gone really high. Your average would have been like, again, even if you had just been equally buying, I think it still would have been really high, but equal buying would have been hard. But you would have had a pretty high average. It would have been up here around $70 or something. Weirdly. Those numbers kind of work out to be like previous all-time highs. So then this drop right here into this range, that was like the shift value at work right there. So they already like basically when the ape was created, they dropped us into this like lower range and you were losing value. So you immediately lost value. But if you had been buying and accumulating in that area, not only did you lose value, but then you also lost like a considerable value because now you're basically buying shares. You thought you were buying shares at like $45. I mean, it wouldn't have been that. $4 versus $12, right? So you thought you were getting a good deal, but really you were buying shares after the split was going to happen. You were buying shares at pretty much like $12. You're pretty much at the same price you were at up here. So your averages were like going down, but they were disproportionate to like if you had been buying ape at the same time, which was trading much, much lower. So like the whole point is that this area from like 31 wouldn't have been that high. This area from like 40 down to about this region here at 19, that area was at the actual price, and it was like, again, 4 down to like 240. Which means if you had been buying ape during that time period, and there was overlap, it's not like there's no overlap. So if you had been buying AMC, there was a considerable overlap. But if you had been buying A and C, it would have been like here. If you had buying both, your average could have been like here. And if you had been buying just ape, your average would have been here. But then the weird thing about it, and this is the thing that kind of now I'm like, oh, okay, I get it, is that when you shift all of these valuations, suddenly it's like the range is quite large. So now if you take that and you take it to where the opening prices are, mother effer, it comes right down. Oh, I'm sorry for the language, guys, but of course it does. Why would it not? Of course it would come right down. That's it. And there it is. There's the middle at like 6, whatever it is, some weird number, 613. And there's the bottom at 240. So they're just retraversing the ranges. We already kind of knew that. So like the shift values, they're complicated, but they're also not. So you would have had a solid average. So if you had been shorting AMC, then you'd still be good. You'd be good from like here down, right? And if you had been longing, at least from here to all the way to the bottom, really, since it never goes high again. Yeah. Even if your average shorts were like right there, you would have only been in trouble if you had somehow had an average short position in the middle. Sorry. You really only would have been in trouble until 612. So you just have to drive the price beneath 612 and you'd be green all the way down. No wonder this massive move happened, because your shorts had basically, I mean, probably were green from the top down because I'm betting they were more heavily leveraged against AMC than just 50%, like doing the actual averages. But then if you had bought only the low end, then all of your accumulation would have been down here anyways. So as soon as the price opened up, you're actually opening up. If you had just bought APE, you're actually opening up like way higher than you would have had. This gives you even more selling pressure. You're 100% gain, 180% gain on your APE positions. Now, I don't think it's that cut and dry because we don't obviously know what positions people had exactly. But that means that you basically had like all this time from $12 down to $6 to sell your APE. And then your short positions go green. Oh my gosh. And then you basically have the next 180% in short positions green. Oh my gosh. Only an operator could do that. Jeez Louise. APE profit, AMC profit. And then in the end, you can kind of do it all over. You can kind of finish it off. Because you could reaccumulate while you're doing that. So while you're basically getting out of AMC short positions here, you're buying AMC shares. Now that you know it's coming back down to the low. Wow. And you already knew it was going to go there because 240. Why 240, Booksy? Because after the price change and after all the shift happens, the 2.2636, it's not exactly rounding up to 240, is it? It's rounding up to 226, 227, $2.27. But remember, that $2.27, yeah, it's similar to like some of the early numbers we saw, like 292 and all that stuff. And that might be the goal here, is that it's actually not like a huge spring. If you just look like kind of horizontally, it wouldn't present itself as some kind of macro spring. But weirdly, if you do the evaluation, that number equates to $1. So it basically is a way of dropping it down to those bankruptcy levels that we typically see. Well, it's not exactly like a penny stock just because it hits $1. It's penny stock when it drops below like 5 or something, you know? So that was already done. I mean, that had already happened during this whole transition. But like in the sense of like $1 being important, it is very important because it often represents the bankruptcy values. When push comes to shove, there's often a split that happens at that value, so on and so forth. This is weird to me to look back at now, just bringing it up randomly, and to think about really what could have happened during that time period. So if you had loaded up on AMC short positions and you had loaded up on 8 bull positions, you would have been green for the first half of that downtrend in the 8 positions. You would have had all this time to get out of 8 positions, all the way down to 6 from like 12. So you could have sold, which is probably what this is about. You could have sold at 10 and 1080, basically, knowing that the market's going to rebound and buy it up. You could have been selling your shares that are now converted, opening up new short positions on AMC. It's basically like a reversal. So you sell APE, open short positions on AMC. It's complicated because those shares obviously came back together, which is what's weird about it, right? But you basically get to double down because you get the profit on the 1% that you had, and then you get to start new positions, and then boom, here, those AMC short positions plus the new short positions are now profitable. And you can now buy, so you're also covering shorts and buying at the same time, which you may be like, well, that puts too much buying pressure on it. Where's the selling coming from? Well, again, selling down through that middle. I think that you could probably even do it without much ado. Most of your operators would have had an average price of $2.40. That's where it comes down to, like, the numbers matter. If you could somehow separate the shares, they probably would have mattered. But I think in the end, because everything comes back together, those numbers are a little misleading the way I'm presenting it. It's more complicated than that because there is and I'm not trying to use that word a lot. I've been saying complicated, but the math would be different because I think your numbers would look, because I don't remember seeing any distinction between one share or another once it happened. So it's like the whole thing is like a particular, would have to be done in a particular way. But it's nothing for like a computerized system that they know, hey, here's what we're going to do. We're going to program this. Really smart. I mean, give credit where credit's due. It's a really smart schematic. You might be saying, well, it's ripping off. It's fraud. It's blah, blah, blah. Yeah, it is if you're on the other side of it thinking that things are peachy and keen and that things are going to go your way. It's not when you think about if this was already in a distribution and it was going towards the bottom, they probably already had in mind the same schematic. Just it would have set up higher and then dropped lower. So it would have set up here off this bottom, maybe in a similar way, but I think it could have stayed very elevated. It probably would have stayed around that $12 mark and done all this stuff there. But instead, they went ahead and enacted the shift early on, and it was already kind of done. And because of the ape, they just sped it up. So it sounds like, oh, it's like they changed their plan and all this stuff. Nah, not really. Because again, if you had done this higher up, and this were to go low here, and it had done the same thing, but it had done it like off the top, right around where that deadline is, it would have still looked like a cat ear, right around that August 2022. That would have been like where the hook was. And I think we pointed that out before, because when we did the measurements, it looks like it comes right back up to where that AMC, when you do the 2.2636, it goes right back up to where AMC converted. So it would have been like that anyways. But then when it dropped, yeah, it would have been a big drop, but it wouldn't have had as far of a bottom. It would have only probably have come down to right here, which is what we see in that conversion when we use the chart shift. So, and then weirdly enough, I do think they got a little bit extra whammy out of it, but it would have been right here. It would have come down to essentially that 236 area, which represents $1. So the idea would have been to drop it from that $12 area all the way down to $1. It makes sense. It's not pleasant, but it makes sense. And it does make sense with the creeks, because the creeks back here, some of them were just not checked. They were really low. So they would have dropped down. I mean, they definitely would have come down to like this area right here, which it still looks like they do, but it looks like we're too low, This is really bonkers. Just think about it now. So that 240 was already baked in. I don't know how in the world. Well, I say that, but I guess if I had known the numbers in advance because I was controlling it or I knew where I wanted to go, you could have done the math in advance. It's not like that number was hidden. You only question they would have had would have been the reverse split. That really the only question, because the conversion of one to the other, that was just a matter of tracking the share count and the valuations. So, well, that's fine. You do whatever you want to do. I'm a big fan of understanding it. That's all. The more I understand about the enemy, so to speak, the more I can understand the chart. And then if stuff like this happens, I'm not wailing and gnashing my teeth because I'm like, oh, okay. So there's a possibility here that during this whole schematic that this actually does go very high. It could go to like 11s and then rebound and go up to near, by September, go up to near 20. What that represents is weirdly enough, is like the gap fill from up here, which is the shift value. And then from that point forward, so it's basically like representative of this right here, which makes, I mean, we've already done this and it makes sense. But then what's weird is that on the whole, so if and when this goes down and hits that bottom, that's where it would be, and then it would push back out, and that's the shift value. So it comes back up and fills that gap, and then it goes backwards, potentially again. And what we're really witnessing in some ways is exactly what we often see. If it's going to distribute, the first move is often like to get back to that drop ledge, right? It doesn't always get there. It can be kind of weak, but often it does get there. And then the second move is really whether or not it builds out and it does the cat ear thing at the end, if it's distributive. But that's where that wave came into play. And we looked at this back here. It's the same thing. So it's a little confusing because it's like, well, which one's the first? Which one's the second? Yada, yada, yada. I know. Like, it gets a little confusing. And wouldn't this mean that this could then like not even go back above like $4 and it gets complicated. There's a lot to talk about here and unpack. There is. But again, because it's iterative, the idea of it going back to these drop ledges is pretty much exactly what we're saying. And that's all this did. You know, this doesn't advance any further. So it comes back to that drop edge after an extended period of time. And it took a while, you know. So what are you trying to say? Well, I guess what I'm saying is that there's a big macro way to look at this in which you have long-term creek jumps. The macro way to look at it would be basically like this is the build out to like 11, and it'd actually be quite low. And then you'd have a build out to like 20, and that's what gives you that hit. So it's like 11 something, and then it goes up to 20. And this is in the chart, you know. But then it comes back down, and this is where things get kind of confusing because this is obviously part of a bigger whole. Eventually, though, the answer is there, which is that this does do the sideways action and drops down. This is essentially the same as what happened here on the big picture as well, when it goes up and then it comes back up into the formation. I had just thought it was going to jump over. It never does. And there's a weakness really early on. But again, this is the same exact motion where it comes up and there's an expansion of the motion because it obviously goes down and sideways, which is weird, but it's the same exact thing. It's the same cat ear motion. It just stays low. It doesn't cross up and over. Probably because of ape. You know, that's what we were just saying. Probably because ape and AMC to some degree. It has even worse of a look than it could have. But that's it. It's the same motion. And then it goes into a drop zone again. Well, it's just going to do the same thing over and over. This is where things, to me, get the most interesting because I love seeing this kind of stuff and then trying to understand where that goes next. I don't actually think this motion right here, again, I don't think this motion has happened yet. It could have, it's possible. We know this goes up and it hits it and you're like, well, it already happened. But it didn't because we know that the valuation is actually at 20. It didn't actually happen. 1960. It didn't actually go up that high, even in extended hours. So there's a sense in which this is a bit different because, yeah, this is like all pitched downward. And so it looks very different in a lot of ways than this guy, which is pitched more up and upright. So this never makes another high, but it's the same exact thing, right? You can see that motion right here through the cat ears. It does come back above the top there, but during that, and maybe that's part of this that I'm also not able to see, Maybe this was going to go like way high. Maybe it would have been up here. You know, we don't know what we don't know now, but maybe this was going to be like a really high distribution, just like this guy, and it was designed to kind of get you back up towards, there was a weakness, but then it doesn't ever, it just kind of avoids it and stays way up here near 12 to $24. Sure. I mean, I believe it because this one was set up that way. But this is interesting because this one never came back. This never came back up to the top. So a long time ago, when we were first looking at this, I thought it was going to come back up again because I thought that right here, it was going to have a double up. That was a long time ago. So I had two targets. One was there and the next one was here, I think. I don't know. I want to say it was like slightly higher. I think at the time it was like $36 or $38 or something like that. But I thought it may need to come all the way back up to here, and it was like the second wave. So the first one was going to go to 24, the second one was going to 36, which is what threw me off here when it went into a distribution, because I thought, well, it may still go to 36. And at the time I was like not really 100% sure about it. So I didn't put all my eggs in one basket, but it didn't matter anyways because the stock tanked and I was holding options and all this other crap. So it all went wrong. But this is a very similar build out. The difference is that it doesn't have that second leg at the top. It never goes up to hit the top. It just kind of went back down immediately. What's curious is that when you look at this pattern, it's pretty obvious that that is indeed there. There is indeed a move to the second top. The first one comes back to that pinnacle, but again, slightly different because on the macro, it did come very high. It came higher here in that March 2022 than it did here, relative to itself, right? Relative to its own range. So they did all the distribution that they wanted to do, but I didn't read that into the chart. So they had brought it up higher than expected. On a tertiary glance here, you're kind of like, nah, it's right. It came right up here, right? But that extra little push, maybe all they needed. And then they don't ever come back above that marker again. And you can see in this particular example, they do. So like in this one, they definitely came back above that marker and they go to the next one. So the idea that I had was it was a diamond. The exit trajectory in the wave had it pointing up to that higher marker. It would hit there and it might at that point jump the creek that was presented downward. And I think that's really where I fell apart, because if I had known about what I know now, I probably would not have made that assumption, because it went above this guy and you thought, well, it's probably going to just keep going. But that's how distribution works. You just poke above the top, leave it alone. And then they did the same thing later, right? When they bring it back up again here, and it works. It's efficient. So they popped over the top, so on and so forth. So there's like a double up thrust. That's the UTAD in a nutshell, like one and then the caddy or two. It's just so weak looking because of all the ape stuff going on and all that junk that we just talked through. So you don't ever get like a second push here. Like it just never happens. It doesn't need it, I suppose is the best way to describe it. So what's curious now is that you actually have, as an example, like a macro version of this at this particular point in time. It's huge. It may be easy to say that like, well, this is never going to have that move or whatever, and it's not going to look the same. But it actually would make sense if this pushed up and then pushed up again, because it's like that double up motion. Although I got to admit, that doesn't really give me a lot of hope, because now I'm wondering if it could be quite slow. I think initially I thought it was going to do the double motion here. I'm not so sure anymore. It may not do it until like December, which is odd because the timing is, again, kind of whack. It doesn't really make sense. So what I thought originally was that it would push up early and then coast down and sideways and maybe have a secondary push later. But now I'm wondering if it does indeed push up. It goes to like, I don't know, $10 or something like that. And then actually we end up with like a downward motion till December. And then we push up again and go to 20 going into the February deadline. February, March. That may actually work. So it's like a Santa rally, and that way you don't actually spend very long up here at all. September and October are traditionally much more downward months anyways. The market typically goes a little more red during that time. This would give you a lot more time to accumulate in the range that really haven't touched yet, which is here. So it certainly would make sense to spend a little bit more time there, right around that middle. And then break out again going into like December, and then you basically can just form the cat ear on this widening. And this is, without going into too much detail, this is exactly the way that it sets up in 2020. It's just flatter. So there are going to be people that say, well, that's not right because it doesn't go to the moon or it doesn't go as high. But the thing is like, this is the exact same, proportionally, it's the exact same setup. Whether or not it goes as high, I don't think is the question I need to ask, because I'm not really concerned about that. I'm concerned about this motion right here. And you can see that's where the cat ears essentially form on that wave. The downward breakouts lead to that point. This is extremely steep back then. It is not that steep right now. I've said it before. I'm going to keep saying it. It's not that steep right now. So it makes me feel like they could go as high as, I mean, they can go as high as like 12 something or even like 15, but I don't think they need to. The middle is right here around like 1060. And then you really can just kind of leave. And that's what happened back here. It doesn't stay in there. It doesn't actually break back in again until the second run. It just kind of peaks up and then goes sideways. And it just trades according to the range it's in. There's a reaccumulation there. So it would make the most sense. This is going to come back down to like 4 at this point. If it doesn't go up again, it's going to come back really low. Yeah, potentially as low as 4, which probably makes sense long term. In some way, like this is some kind of long-term creek right here. It would have to come all the way back. All right, there. That's where the up thrusts are. This guy. Yep. I'm kind of worried. I hope it does go at least to 10. I'd be a little bit worried it like stops really low at like 7. Could stop right there. I think that's too low. But that might make sense for like the big picture at some point. So I'll have to kind of come back to that. I'll have to look and see. That's really low. I suspect that I had suspected this would be the top and that whatever this number is going to be the backup for later, because it would naturally go to a place that you'd blast through later. So it'd have to set it up as like a 50-50 marker or something and then bust through it. So if it sets up low and doesn't go any higher, this doesn't really give me a lot of confidence. If we don't go down past, let's say 226. This doesn't go much past 7. Yeah. So it's this guy in reverse. Gosh, that'd be awful. So now at first we're only going to here, and now we're only going to $7. What? Well, maybe. I mean, to be fair, if you look at the wave that I have, that is actually where it stops. It stops right here at 7. They're laying you up into this little guy. They don't really want to go above here, so everything about the accumulation would be directed on getting you from here up to that point. It could go beyond it, but it really isn't about going way beyond that target anyways. So if that happens, this is like, ugly. So basically you hit like 737. Imagine the tears. People would be so angry. And then it would come back up and you'd have an accumulation phase. It'd still work. It'd just be really low. Yeah, it'd be really boring. And basically you'd be buying back up towards 6 something. Because this is the area that hasn't been traded. If you look at the VRVP, it makes more sense. It should be a gap zone there. Yeah, right above 540. So you're going all the way back down to like 4 or something, which is the high liquidity mark, the high shelf. But then you're basically just leaving that range again, coming all the way up. And now you're going to set up camp, pick out a couple numbers, probably like 512, 575. And those are checked. And then you just walk back up and out, and that's the reaccumulation that happens right here. It's more sideways than up and out, and it builds out from 7 down to 575. Yikes. Yeah, that's it. And then it jumps, and it goes up to 7 something, and then that's when you really take off. And you still go to 20. Nothing really changes. Weird thing about this top is this top doesn't really matter. The January top is not that important in the whole schematic. It just isn't. What matters more is the place it breaks out. So if it breaks out, there's $20 right there. If it breaks out at 680, that's the 50% mark from the bottom. It's perfect. Yep. Dang it. Booksy, why you keep changing everything, man? I'm not really changing much. I'm just looking at the way this is built. So I think there could be an extension here, but I'm doubtful this is the way it looks now. I think that they're going to hold it off because it's already super slow. I don't know why I keep thinking it's going to go faster as opposed to slower. Yeah, I don't know how this breaks out. Maybe in November it starts a big rally. That might make sense. Year over year, it's been kind of rough. Yeah, November it was right here at 460. So year over year it would be up. You get the slingshot, you get everything. And then goes up to $20, and then by the time February 2026 comes around, it's already in like a macro distribution. More than likely doesn't go up again. It actually already is done. Because then it works its way back through the expected iteration. If it has a second wave down, which it probably will. I mean, look at that. That would be the big jump. It's perfect. But it ultimately jumps and then doesn't check the creek. So then later, 2026 ends up being a really crappy time. I'm not saying it's going to be 1-to-1, but it'd probably be pretty close. It should be like this. Cat ears. All that jazz. It'll be up again near this area. The drop zone. And frankly, these guys are already here. You can see that trend I'm building off of is already there. It's nothing like new. It just creates a micro version of the same thing. Wave, distribution, this might be where you have a change of character. I guess if it were going to be anywhere, it might be here. Yeah, 276. That's right back down to the floor. So from this point, I already know that, but I'm saying like there would be like a potential at that point to have some kind of a change and not come down again low. That's a big question mark. Yeah, then you may not have like any kind of actual. You just buy up again right off the $4 area. That would be a really big change. If that happened, I'd be super bullish. Like long term, I'd be like, what? Because a breakout there leads to like massive 2027, 2028. Then it leads you to like a probable, well, it would have to do it one more time, which is again really obnoxious. But because it changed character here, this time when it goes up, it would actually build up to whatever this vertical is. So it'd actually come up pretty far. And then it would do it again. And this is how you get the big cup and handle look. So the iterations are here, here, and then here. So this is another iteration. But if it changes character, then the next one actually sets up high. Instead of here, it sets up here on the top. So then it does another iteration here. Does it again. And this time would be the most different because it probably looked like a giant cup and handle. And it may very well be an actual cup and handle then. But you have the M cross. Again, I don't know if it could go low, but that's just a big question mark. I'm not sure. That'd depend on way over here. But if it had the change of character, then yeah, then it's going to go. This is when it finally goes up like really far. Should head all the way up to like 100 something. Usually it looks more like the first push. I've noticed that the measurements tend to be kind of the same. I'm curious if that's actually the bottom again. It might be. It is. That is the bottom again. Oh, that totally makes sense. So you're just setting up like a gigantic kind of cup and handle off the bottom. It also doubles as a potential cattier, so it's really smart because you basically could have, if there's no weakness here, it could build out. If there is weakness here, meaning it drops below $4, then it's bearish. Because then if it drops below 4 on the second push down, that's actually weakness. So if it comes up again, you basically have the opportunity to now have like another iteration, micro iteration. It's going to look like a cat ear. That's what they do. It's why they get the 4 top, because it just chops into the corner. And who knows, probably like 2029 or something ridiculous by then, where the debt thing is due. But yeah, then it builds out and this one could be quite nasty. This one could come all the way back down to like here. Because it probably would come back to check that level. It would depend at this point on probably debt news and fundamentals. All of this would depend on fundamentals, but there'll be news involved in all this. So this is like where the cat ear builds out, and then if it's bad, it drops low to whatever this trend is, probably to a new low, $1.90 or something. So it's just a macro wave distribution, like one and then cat ears. And if it doesn't, then it's really good. You could have a, this is a weak way to looking at the chart, but yeah, this is where it actually goes up and usually looks more like the first push. So this is like the second push. So this is like push 1. 2. This is like the big one. Yeah, it goes up to about 246. Which seems kind of crazy, but it actually makes sense if you think about the amount of time it would spend down here. That's a very, very long time to spend. When you spend that much time like they did here, that they spent 2.5 years or whatever up top, then you can have these big pushes out and up. So I wonder if this is the same value as well. It is. And there it is. There's the missing. There it is. We figured it out. There's the missing. There's the missing hit we didn't get, right? I was talking about a minute ago. We never got up to that 36. There it is. It's right there. Goes up to 36. You guys are like, that's not 36. It's 190 something. It's 200. Yeah, but it equals that 36. It's weird too when you look at this like as a macro chart. Ignore this stuff. This was just us doodling. But if you look at this as like a macro chart, it actually makes a lot of sense because this is just a build out that's consolidating along the bottom. So it's just like a big wedge or something on the bottom that could break up or down directionally. It's very simple. I don't need this. I was just using that measurement. But then when you look at the big picture, it's like, oh, where is it going? Oh, it goes to 36. This was like the shift value or whatever, which is now 200. That's not a very complicated number. It's just the previous highs. It's like right where you would expect it to go if it popped up like that. This is just very long-winded. I mean, there's a lot of question marks about that with timing. Yeah, that's 2029. Crazy. That's when the debt comes due. They gave themselves to kick the can down the road till 2029. I think at that point, you're probably going to have a decision made late 2028. I hate to say it, guys, but this is totally possible. Totally possible. 1, 2, 3 iterations, 4 iterations. I mean, it's gonna almost like play by play, like 1, 2, 3, 4. It's exactly what I look for when I look at this kind of stuff. I don't know. But I think if they kick it farther, I think you're going to have a lot of questions. And you know what? This is going to sound weird. Now you mentioned that. We were saying that earlier, like, what if that February is like a pivot, right? It's like a middle on a wave. That means that this goes on forever, right? If you take that and you move it out, that February 2026, I'm try to get it on the point I want it on. Yeah, it's March. And look at that. The deadline there is October 2028, the halfway point. Dang it. Man, you usually see an upthrust in the middle, even if it doesn't go anywhere good. Yeah, that's weird. So this is actually quite nice. So then my question is why? Like, why only go there? Is it because of this trend? 1, 2, 3, and then maybe it needs to hit that trend again right here. Kind of works though, doesn't it? Because it's right where it needs to be. But instead of, wow, but instead of using this as a chance for upside to hit that mark, it just delays it and goes sideways and triangulates into the right spot. That does work. And the whole thing is just a scheme to like consolidate around the previous bottom and dip into the lows and then make a decision. And we don't know yet because we don't have these moves, but it could be bearish, it could be bullish. It really depends on this first one. But that's a perfect measure to where we think it might go. That's a kind of a bummer. $200, and then the middle is 20, like percentage wise. Oh, that's 222. That's already pretty much where the bottom is. Wait, 222? That's really close to 226, Booksy. I bet you percentage wise, it's the 226 is the dollar mark. I think that 200 to 226, it's like 200 to a dollar basically. I don't think that's special. I think that's just where the numbers are. Yep. It does make sense because you'd be trying to generate, you'd have to generate like a middle here. You'd have to generate some kind of a center if you're going to eventually get up there. Really fascinating.
It's time for your afternoon stretch break.
I mean, it doesn't have to go that high, but if it doesn't ever hit this trend, I think it probably will. And that's a similar move off this bottom. That's the crazy thing. It's like this nearly the same move. Actually, it is the same. It's just inverted. You see that like dip? It just starts a little bit odd, but it'd be like from here up. Like, yeah, the breakout up. It doesn't have all the pieces in line at the same time, but they're there. I guess it could go up first. I mean, there could be a, especially right here, there could be like a breakout motion that's like higher up, but that's whatever. It's like way off in the future. So yeah, it's 2029. That's pretty wild. I probably won't be able to recreate this chart, so I'm going to just take a picture of it. If I end up deleting it or something, that way I have it. At first, I looked at this and I thought this looked really dumb. Because I looked at this line and I thought, well, that is where it anchors, so why is that? It should be important, right? At first, I thought that looks really dumb. But now I actually think that might be right. Because that's the wave center. It's really more like here. Check this out. Yeah, I pulled it back because I was like, well, that should have mattered. It's like the walk down. There's a ledge there, but it should have mattered more than just horizontally. And at first, I thought I like glanced at it. I was like, that looks wrong. But then I'm like staring at it, like, no. Actually, it makes perfect sense because if you're looking at this as a wave schematic instead of something else. This is the cross here. I don't know which one I like better, but they both kind of work. I feel like I see this one as more likely, the thin one. Yeah, it's there. That's the cross up. Crazy, dude. Right here. And then the cross down. But it's off. It's offset. So it's offset by that 226% value. So like it would have been, this is a bit odd. Well, let me see if I bring one of those back. Hold on. Yeah, I don't know where it is now. It's gone. It's off by this much. So the middle, dang it, that's where it hit, isn't it? Right there. It is offset, but the middle is, oh, that's the same middle. Oh, wow. Oh, that makes sense. Of course it is. I wonder if that's all they did. I wonder if they just like calculated what that needed to be. What do you mean, Booksy? What are you even talking about? Well, I mean, there's a little bit of nuance to this because I'm not measuring like perfectly. And obviously you could make it perfect and I'm not doing that. But it is curious because if you look at the original center here, when it jumps over the middle, that's where it happened. And it's right at, we've seen this before, but it's basically right at that place it broke out right in June. That's like the center mark. If you take that and then you offset it down, so again, this is the offset value. If you offset it down here, so just transcribe that same idea. And so now there's a new center, and it's on the middle here. It's like, it's kind of wild. It's basically like perfect. I think it's going to lead down to 226, which hasn't gotten there yet. That's pretty wild. So you shift the middle point down that much. Naturally, the anchor There's the ape creation. Son of a gun, man. Sorry. There's the ape creation to the drop, the judge's earned decision. Golly. Yeah. So it's baked in. They already baked in the offset. That's pretty fun, I guess. So that offset was baked in, but then when you take it to the actual 50% drop value, it's this guy. I don't know if it's going to be perfect because, again, we could probably make it that way, but I'm going to try to, like, eyeball it. I mean, it's going to be 226 probably. I'm just telling you. Spoiler alert. There's reasons that number exists. Yeah, maybe 222, but I mean, I could be off by a little bit. It's like a few pennies. What's the top here? The high is... what is that? It's really far. It's like 405 or something. This is pretty wild, huh? I need to get a lawnmower. I gotta get out of here and get a lawnmower. I don't know. This says 393, but I guess I'm like a little bit off with this. I guess it's not that far off, is it? 393.63. No, I'm not using extended hours. No, I don't care. Jeez Louise, that's crazy. That's wild to me. So I can't see the middle value there. Like, I don't have it like labeled, but I'm gonna try to, like, again, eyeball it a little. It's gonna be a little bit off because I just, quite frankly, I just drag this on the chart. That's pretty close. But what I want to see is if that value is actually right on that bottom. Just snap it. Uh-huh. Yep. Again, I might be a little bit off, but I think that's the shift value. So this is weird, but it works. That's very strange. I think I'm right. I think I'm right about this whole, like, shift and all this other garbage that we've been talking about. I think they did that shift during Ape. It wasn't impossible that this, if Ape had never existed, that this could have stayed higher, but it wouldn't have made a huge difference because in the end, you still would have come back down. It almost doesn't really matter. Like, I don't know if you guys can see this, but that shift value is actually like wrapping around. This is so weird. It's actually like 50-50 wrapping around the previous. So it's like, it seems really odd to me. Maybe this is where it came from. I don't know. We're learning something. I think it just came from the math involved in the change of share count versus market cap. But this is definitely right. Like, this is 50-50 right around the center mark. So again, I don't know if you can see that very well. It's a little confusing. But there's that shift value that we use, which again, I've calculated that by doing other things. I'm not using this randomly. This came from the 2.2636 calculation of market cap valuation in reverse. And you can see that 50-50 right there goes from the ape inception, which is August 2022, to the Judge Zern decision, which is weird because that essentially means that that was already at play, and potentially if this had gone sideways instead, just like we were just hypothesizing a minute ago, we weren't really sure. I mean, I couldn't really tell you. I just said maybe. I think that's right. I think this would have basically come back up. It still would have been weak, but it would have come back up to that area instead of coming down. And that shift represents a 50-50 or a 50-50 again right here if you split it in half. Around the middle, which is kind of odd. I don't know what exactly to make of that. Again, maybe this was, again, part of the defining range, but then they just shifted it down, using an even interval, like the half of it, right? So it's like, we're going to take it down this far because of this. But I'm not sure which came first. Kind of a chicken and the egg thing, nor do I really care. But I do know that number in the end, I don't really care. I do know that number makes sense now as to why this looks like it looks. And then the shift, weirdly, by doing that, they managed to shift the chart that same interval down. I think that was just part of the design of it. They did shift the chart, the operators did, shift it by that interval down. It's just numbers. I'm not sure, again, that it really was some kind of grand manipulation screen, or if it was just about valuation and making sure it was the correct valuation. But somebody had to drive the price around, And ultimately, where that 50% is now, if you take the shift and you shift it at 50%, that makes up for the extra length, which at first glance, it might seem like I just did that like a self-fulfilling prophecy. Like, well, yeah, but you did that by putting that thing on there and measuring it. But it could have not worked, right? It could have not existed. So if this had come down and it wasn't 226, but it actually only hit a low here, this shift value would be wrong. You know what I mean? So it is totally possible that this could have been not that perfect. So I just want to make that clear. It does have a feeling of contrivance, like I took it and went the other way. I contrived the numbers. I made them into something. I know that. I can see it. I can kind of smell it too. I'm like, oh. I mean, you could kind of bake it, I suppose, if you had that in mind. But I did not have that in mind. I was going in a forward motion, not a backwards motion necessarily. So this is sensible. Because this shift value works to generate a 50-50 that now drops down lower than what was anticipated. Now the real question comes into play, which is, does that mean that this now is this now an invalid 50% line? I think the answer is yes. And I'm not going to like that because it means, again, that you'd have to move that. But I think it has to be yes, because if the goal here was to shift it in order to appropriately get the right value, then that means that by default, this also must have shifted. It could not be the same. And surprising absolutely no one, it's 1960 area. And why would that surprise us? It shouldn't surprise us because we've already done this shift before. But now, looking at that angle, that region is more important than maybe previously anticipated. I think things get kind of dicey because we have to use one or the other. I'm going to use the top one. But yeah, that one makes sense. So this is the new anchor, which is the more appropriate one to use, not this guy. Why did you do all this, Booksy? Because if this hits a low now of like 226, actually, it doesn't really matter where it hits a low. Once it crosses that middle, then it's going to go backwards to the previous low. It could be a number of numbers, I suppose. But how long does it take? You cannot answer. (2027) February. It really just depends on when it's supposed to get there and what the real target is. What's in mind, you know. Here's the kicker, right? If you look at it now, we have a 50% retracement that is like an offset value, and it really only goes up to this bottom here at like 29 or $30. So if you were to take that and divide it again in half, you're going to find that that's probably a really relevant number. It's like 830 or something like that. I bet it's going to be really close to wherever that first hit is. Yeah, or wherever the next hit is. It's like 831. So what comes next? If that's the wave through, gosh, this is hard because it's offset. What's so difficult about it? It's just offset. It's just difficult. It's not as simple as it could be. If it weren't offset, I think it'd be a lot easier. It has to be offset on the top too. Well, I guess I could just use like a trend now, since I can make a parallel that goes around halfway. That'd probably make more sense than trying to like do the offset, and then that'd be really confusing anyways. Probably wouldn't work how I want it to work. Well, I mean, it could. I'm just, whatever, just talking. Okay. Yeah, it's going to blow up. I don't know what it's waiting for. Well, I think it's going to blow up. I shouldn't say it's definitely going to blow up. Okay, but you don't measure to the top, you measure to the middle or close to it. Oh, wow, look at that. That's where that trend comes from, maybe. Well, I guess that would make sense because they were using it here. They could have used it there. But now this is actually like the top on the trend. That's incredible. The March top and that drop zone way back here. That's actually where the top of the trend is now. Wow, that's crazy, dude. Stock market magic, I guess. So this is May, this is like May 2027. No, this is wrong. Because it needs to be I measured it wrong because it needs to be where the second low is, because I measured here halfway. So the first doesn't really matter. It's the second one. Which sort of looks like it's already lined up, doesn't it? That's freaky, huh? Like, it looks like this was a build out above it, and then this just tapped it. Which probably was. I mean, I'm not gonna... Yeah. See how, like, this now looks like it just jumped above that move and then pushed off. And now it's, like, come back down and tapped it. And then we're running, like, this schematic where if maybe it pumps up again just to kind of distribute, but then it comes back down going into August, and that's where it hits that low. So where does it hit 226, Booksy? Yeah, I mean, I don't know. It doesn't look like it hits it perfectly based on the way I drew this, but it's pretty darn close. Maybe it's not 226 in the end, but it's there. That's pretty wild. That's actually really cool. If we say that it's earnings, then we can just work from that. But that does look right. It's the same parallel type structure. It's really bizarre. This is why it's good to do stuff on macro and just see what's going on. So I did it wrong because I used that, and then that's not quite right because it makes it look higher than it is. I like it because it matched that target, but I think that would be more accurate is that one, which is actually the August top, not the other top. Weirdly, they're just the difference between the August top and the other one. It's very strange. That's really weird. That difference is the difference between that region and this region is the same. What the heck? What does it mean, Booksy? I don't know. Don't know what it means. Not really sure why that is, but it is. I mean, if we think of this as like an overextension, then it makes sense because it's distributing over top of it, and then it's checking, and that's just defining the bottom, or the tops, I should say, the actual tops. But now you have an offset. So the whole point of this was to get to this offset value. And the reason for that is I'm trying to identify where the middle is. I knew it was coming through more than likely that reverse split because that's the shift value. But now we actually have a top. So this changes things because this actually looks like 2027. So that shift radically alters this motion by quite a bit. It doesn't really matter how you slice it. This would be February 2027, not 2026, as previously stated. Good news is there's a ton of time between now and then. And got a lot of room for upside. Bad news is there's a ton of time between now and then. So I think what confuses me the most is trying to understand in relationship to, yeah, so this is just a year apart. I mean, and it makes sense sort of because this was like a 10-month area. So it makes sense that this would be like a 10-month area. So not quite wrong, if you're wondering and you're like angry or something. Yeah, this is March 2026 to February 2027. This is an 11-month period, which does make sense because it would be very similar, or it could be, I should say, I would say it has to be. It could be very similar to what we experienced here, which is a very similar time frame. I mean, it was 10 months and some change, but it really was close. That's very close. So when I look at this, it may at first seem kind of frustrating, but then I'm like, maybe that makes sense. Because if you're only going to come back up to the top, and I guess from that point of view, you might say it goes up here and then just kind of does some weird, I don't know, inverted action or something. I don't really think that's how it has to be, but that would be like the way you'd do it if it were just perfect rotation. I don't think that it has to be like that, so. But if it did perfectly rotate, that would be correct. Yeah. I don't really know why or where it would go back to that spot, because that's no longer the middle. The middle is now here at like 30. But then again, maybe it is just going back to like 30. Maybe the goal here is not necessarily to avoid you're not going to avoid retracing the same spots ever in the future. Maybe the goal is just to come back, because it's offset, it changes it, but it's still going to be to come back the same distance. But now you're just shifted down. So whereas originally this would have been coming back up to whatever this is, offset, because it would have been here instead. Yeah, which is that 200 level, or close to it, the 180 level. That makes a lot more sense to me, because that would have been like the previous top. But now it's shifted down. These numbers are not breaking, guys. They're staying super consistent. They really are. So I keep redoing it, thinking something's going to break. Doesn't really break. Yeah, but Booksy, you just said it may not come back up till 2029. I mean, that's like completely different. Yeah, it is. Like, I don't know what to tell you. It's different. The weirdest part about this is that the definition of this doesn't really help us. Like if you're trying to understand it from the point of view of, I think I've already done this, so I'm not going to like beat on the dead bush again, but I think I already did this because I had this on the chart before. I had like an S-curve here. I was looking at this before. This doesn't really define necessarily, so bottom, breakdown, middle, that's exactly like halfway, I think. Wow, it's not even like trying to be hard. That's exactly halfway. It's not even trying to hide it. Now, that's not the low. That's just where it broke down in November. But it's there. That makes it really easy, I guess, to measure. We already knew it was kind of the same. But then it gives me a sense of that's the break down. That could be where the breakout is too. Why is that so different? Let me try that again. Unless I measured one of them wrong. Should have been the same. Because that looked really good. So what happened? You guys are like, it's August, Booksy. Yeah. I don't know why that's now off. I don't know. Maybe it's just a matter of this thing being a little off. That's January 2027. Yeah, that makes sense, because then that's perfectly like 11 months back to March 2026. Yeah, March 2026, January 2000. That's the rotation. This is getting really crazy looking, I know. But actually was fairly simple to see. That is the breakout. It is. It's right where the change of character happened. No, no way. I'm dead serious. It's right there. It's right there. Yeah, does that mean we're just going to go up? No, but it means that that is indeed the pivot. And it makes perfect sense, because this actually does have a higher push here. If you're looking at it in reverse, this is distribution. This would be like where you're going to have like a final accumulation. Oh no, I don't want it to go down that far. I don't want it to go down that far either. That's a really long time. But I mean, I'm just looking at it like a rotation, so we'll just do it that way. We're already in the midst of it. October? But you said September. I did. Well, it is as it is. If the timing's the same, it wouldn't be till October, which is a very odd time to run in the market. Very, very odd. One of the weirdest things I could imagine, I suppose. That's the rotation. Rotational symmetry is weird. It doesn't have to be perfect. I think that's a bit of a grab too, because there's a lot of things there that I'd be like, oh, well, you know, we need to know certain pieces of information. You also have things like whether you're measuring from the breakout versus the run up versus the breakdown and then the run down. I've said February, March 2026 a lot. I still think this is partially wise. It is the rotation, but man, who knows? You know, that's like a really simple way of looking at it. Maybe too simple, but sometimes simple is better. I guess I can't really complain unless it just doesn't work. Yeah, man, that's the wave on a weekly time frame. And then I would just probably suggest that it's, yeah, I mean, everything else would have to be the same, but that doesn't mean you couldn't come low again. And if you were going to be really kind of spooked about it, you could even say that this needs to break really far below. I don't think it's going to do that. I mean, we don't know until something happens, but I don't think it's going to do that, because I think the offset's already there. You know, it'd be different if there was never an offset and this went really low below the trend. I would then expect that there possibly could be a drop below. And we can actually kind of test that, because we know that in the regular world, if this had never had an offset, this would have been the middle. But you would have had a, I wonder if 226 works. You would have had a duplicate kind of case of like, maybe it does drop beneath. But it would be going up to this top, and that top's different. So you can measure from the top to the middle. That doesn't actually drop beneath. Look at that, where that number, that trend is now. So now we've got the original middle as kind of roughly estimated here. No offset. Original top, original middle, which is right where that breakout is in June. And then the bottom, of course, goes back to the bottom in the COVID drop. Weirdly, right, that parallel still exists. You can see it. Maybe it's not that weird, but it is kind of weird. But what I'm more interested is seeing where that shift is now, because it should be up here. Aha. Wow. This is crazy, dude. It really is. I'm not going to fudge it. I just want to make sure it's right. So I'm going to put it in the right spot and make sure this is all where it should be. What a day. What a day for TA. Yeah, so it's a little off. I had it a little bit off, but that's okay. Again, it didn't make a big difference. It's still pretty much in the same spot. You can see the marker. It's like the dotted line is like slightly below it. I needed to do that because I wanted to see on the shift chart if that drop, yeah, there it is right there. So from where we are now, it's like 677. Man, it's really hard to know though if that's the actual low and this is just a takeoff point, or if this really matters at all. It may not matter at all. I don't know. This timing, I mean, I don't know if it matters. It's kind of speculative. I mean, a lot of this stuff could be seen as speculative, except that the numbers are so darn tight. This takeoff is weird, though. I'm going to mark it off. Delete that. So if it just went right down into earnings, it's different than if it goes down over here. That's what I'm trying to illustrate. It's a different distance. And I'll try to be semi-precise. It's not going to be perfect. Mostly because I don't think I can make this perfect. I think this is going to always be a little bit... Looks like 485. That's funny. Of course it is. Why not? Of course it's the 485 marker. Why not? Some of that's just silly to me. And the other one is 460s. Of course it is. Oh man, so dumb, dude. Yeah, it's 467. Why not? Why not be the same? Why not be the numbers we've been using the whole time as tops and supports? All right, so we take this, copy, paste it, and we're going to drag it down to where we are now. I'm not estimating here. I'm not really concerned about everything else that could happen. There's a lot that could happen. Now it looks off because I had changed the number. Should have hit that bar, that part. So not 226. It's 215. And then this one is 207. I don't really think it matters that much because the average between the previous bottom here, 230, and these lows is probably going to be that 226. So it's like a wraparound target. Like I don't really see that as a big deal. I see it as like a, let's call it a distribution, like a standard distribution of numbers. Top, bottom, doesn't matter. And then the middle's right at 226. So you're saying 226, Booksy, but it's really going to go below that. Well, I don't know, personally exactly how low it's going to go. I think that if it hit that marker right here, yeah, it could be exactly 226. But if it had gone down through and it hits as low as 206, the average between these two bottoms is 226. So it's like, I don't know if it really matters mathematically to the operators if it goes slightly below or not. I think maybe they were going to check it out. So they're aiming for those lows. Maybe they get there, maybe they don't. I'm not really sure if it matters. Yeah, and then this guy certainly seems to support that, this one. So this is like the weekly highs. So it's like the outermost creek. So I was saying I don't necessarily know if it's going to hit that, but that certainly supports it. The drop to 20, yeah, I mean, it's right there, right on the money. Right at 215 on earnings. Definitely supported. So that's the equivalent of dropping to the bottom of this giant macro trend that's going on. And the creek cross, of course. Now, the timing on the rest of this, I don't really know what to make of that. It could mean that it's going to take longer to leave than expected. To which end I would just say, well, that doesn't really surprise me. And the other thing were these 2 points. So that's also really similar. So you're getting a really nice, I call it a cluster of, eventualities here, basically. I mean, if it goes down there, it's like right on that dot. So I think it's where it needs to be going into the 11th. Here's what I would suggest. I think that peak, when you look at that 2000 and let's say, we'll just like tell you the June peak, right? If you look at that and you look at it in reverse, you know that that's what the peak looks like. And then it goes into a bigger cat ear, right? So it's just like longer distribution kind of thing. When you flip this upside down, there's different ways of doing it, I suppose, but in the end, you're really looking at this like it's inverting. It's the same concept, it's just inverted, right? So it's a cat ear inversion. This is what we would expect the bottom to look like on AMC. So the idea of it dropping low here and then coming up and doing an accumulative bottom actually makes perfect sense to me. I'm like, yeah, that's what you would expect to see. That's totally normal. I think what's confusing is that this is actually the time of the breakdown. So it's measuring from like the change of character to the end result, which is where the June melt up happens. I think there's a little bit of confusion there because again, in reverse, it's like, how the heck would you do that in reverse, Booksy? I don't know. That's really hard to do. Like, I know what it should look like, but I mean, my expectations are, but I don't know what to. Yeah, I don't know how to do that in reverse. So if like cat ear was coming up, this would be like the big fat cat ear. No, it's backwards. Doesn't make any sense. It's reversed and upside down. Man, it's confusing. Well, let me just think about it real quick. It's like reverse would be cat ear, and then cat ear, and then drop. And then this is like that top where it was going. So, yeah, that's right. And then this is like the cat ear. And then this is where it has like another cat ear, but it's small. That's what we're talking about here. It's like this. It's like really narrow and cramped. And it does that. So that's the reversal of it in upside down land. Which, you know, looks kind of similar to the big picture here, but I'm just trying to think about it in a small window from this date to this date. Doesn't make any sense because this should have started flat then, which is confusing. But interestingly, it actually adds to the idea that this could actually go up again. Really fascinating. See that? Because like, if it is indeed the same and it's just like a change of character, it does add to this idea that this could actually have kind of a swing down again, like here, which is strange. If it didn't already happen, it's kind of a weird idea, isn't it? But then it would definitely go down into a low. And this is also kind of backwards. Because instead of going up, or instead of going down into earnings, it goes up into earnings, potentially. What the? Yeah, that's a weird idea, Booksy. You think it's going to go up into earnings? It would definitely throw everybody off. I don't know. That almost doesn't make sense to me, but whatever. And then it would go into like a mega. But this would have to be some kind of parallel universe type deal where we have the dilution abilities or something. Of course, if they just want to prop it up to get a real drop, then that's also possible. So then you could have a yeah, and then you can have a drop here, but it doesn't go quite to the lows. And then you get this kind of fake out pump and dump schematic. Into a bottom, and then it just takes off. This is a really bizarre setup, by the way. But I'm going to flip it over and just see what it looks like. Maybe it's completely wrong. I don't know. I've never done it this way, but I'm going to try to do it. I've done rotations. It's just a weird way to do it. Yeah, I mean, it's just iterative motion. This is almost believable, except that, so this is really slow. And weirdly, it doesn't take off till like November in this particular scenario. Here's what I would say about this, is that this is like almost right, but I think it's missing we would call like forward motion. We're looking at things in reverse and we're just kind of flipping it and mirroring it. So that looks kind of right, but it's lacking. So it presumes that you don't actually go down into earnings, you actually go potentially up into earnings, weirdly enough. And you're up high in July. This is a completely different situation. And it didn't have to be that far, but it would go up. The reason that this doesn't necessarily make sense to me, though, is because, well, A, that's not always the way AMC moves. It doesn't just flip the cat ear and then calls it a day. Like, cat ears can be varying for a reason. Like, I don't use them like they always have to be identical. They're often very close. And then a second question is, well, couldn't this have already happened? And that answer is, yeah, it could have. I think if it already happened, then it's this motion right here. Like, we've already gone through it. It's almost irrelevant to talk about it because we've already talked about it. So the only thing that's really making me question it is this measurement right here, which on the macro suggests that this is actually the turning point. But naturally, if that were advanced and this is in reverse here, it seems kind of like a no-brainer to me, but like this should be, I know you guys are probably a little bit like over this, but it seems kind of like a no-brainer to me, but there probably would be an offset here that does give you a big run up. So like, this is not impossible, but if it's already happened to some degree, it could have already happened here. So I think this is possible. But I do have to say, like, it doesn't really change anything. Like, I feel like the same exact as I felt before, which is kind of a bummer. Because if it didn't go that far, I wouldn't be like, uh-oh, it's not happening. I would just be like, okay, we're not going there right now, and we may be going down for earnings. And that really leads you back to the same thing anyways. So it's like, if it didn't advance that far and it only popped like a little bit going into the end of the month, and then it drops because of this, July tariff deadline, it's right there on the 7th, you would have it drop going into that Wednesday. If that happened, then you just expect this to come down lower. I would just take all of this stuff right here and just move it on up. And that's what's interesting, is that I think that it doesn't really change much. I'm thinking it doesn't change much at all. It kind of just pushes it into September. So, and then this would change because this is not widening. Like, this guy goes up again. This could go up again. It wouldn't do that. It would just be earlier. And you'd have maybe a move, but this just starts looking like a normal. It really should do that, but it have like the normal M cross going into like September. And that's essentially the exact same thing, just earlier. So if it hit that early, it just goes down. I just don't see it as any different. It's the same exact thing. So it's interesting how this is still playing into the same concepts. It's like nothing's really changed that much, even though it did change. If you look at the big picture, it's like, well, it could be very different. Yeah, I mean, it could be, but this is just sort of like an alternate path. It might be taken. And I think if it goes high, that actually makes more sense anyways, that it could take a little longer. So I'm going to chalk it up to operator decisions here. So the first is like 340, which totally makes sense to me, and then drops, goes low early, and then breaks out. And that worked out. So, and then either way, I think it's still up, but it just depends on whether we're going to do like a distributive top for a long time or not. Yeah, that's my theory here. So it's kind of odd how similar those are anyways. But then this one's kind of interesting to think about, you know. If it did drop way later, it could take a lot longer, especially if it dropped after earnings. It could take a lot longer to sort of come down. It's just something to think about. Because this is a lot slower, so it presents a lot of questions. If I had to pick one, I would probably pick this lower one, to be honest. I know it kind of stinks. We want it to, like, some people really want it to go up high. I kind of wanted to see it push again. I don't think it has to be either or. It could be sort of in the middle. But what I mean is that when I say lower, what I'm saying is that whether it goes to 340 versus going up to just above like 360 or 370, it doesn't really matter. What I mean is like shorter term. Like, so it hits there and then just kind of stops and chops and then drops going into that deadline. And I had done the chart for that earlier. I still think that makes a little more sense to me than going up. But if it does do that and it chops into that deadline, pops up, and then chops into that deadline, it's not impossible that it could just run up again. If for whatever reason that deadline is like good news, then that's probably what we would see there. So I think that's what that boils down to. It's like whether you get the second up thrust or not. It's kind of fascinating if you think about it. This is like, it almost makes no difference. Like they're both possibilities. One just kind of comes up a bit higher to like the 420s and then it breaks down around earnings maybe. And it does use this news on the as a catalyst, whereas the other really just distributes on that same news and then just comes down. It's a lot simpler. And weirdly enough, we were doing this before, but those are the two targets. They really, again, it almost doesn't make any difference. So I think if it takes the earlier route, I'd have to suggest that there's going to be more information in here than I'm presenting on both of them. So like there's going to be pieces here that are missing. Like you don't see them, right? They're not visible in that sense. But maybe it doesn't matter. This should have been a 1, 2, 3 with a drop and then a LSPY. This should be like a 1, 2, 3 with a drop and an LSPY. Pretty fascinating to me. I just don't know if it had the third yet. I'm just guessing that it's at this point it's gone so long. I feel like it probably has had the third, and it's gonna hit there and then not go up again, but like capitulate here. That's just my opinion, and it already made a weakness, so maybe it doesn't matter that much. That is right where it should go if it drops down. Back to 280. Yeah, it's interesting how it almost doesn't make I'm finding I'm just kind of humoring myself with it at this point, but I'm just saying that like it's just really interesting to me that it doesn't make any difference. Like it really wouldn't matter if it distributed here versus goes up higher. There's really no different. The only major difference might be in the initial direction in earnings, but then you still have to see that low, and that becomes the major difference of timing. But you still have to see that low either way. I think it would come back. So it's kind of a curious subject. And I think this probably ends up being right around where if it does do this long term, probably right around where that bottom is, like 240. So they use that bottom 240 as like a shakeout here, long term one. So it's like a big widening spread. Yeah, like a double or triple shakeout to like shake it back down, get to that target. Versus like a hit and then a rebound. That's a little more classically bullish. May even narrow, just go. So, in conclusion, I think upside is very likely, even if this looks kind of crappy. And it doesn't really look bad to me on some levels. I think the fact that this is moving up right now and it's hourly kind of bothersome. It's going pretty fast. And it's not really going anywhere. But it certainly had divergence. So I think it needs to make a push towards 3.5. And there's variation in there. I did that on the other chart. Could be as low as 3.31. But it seems very likely it's going to try to do that push and then make a decision, probably going into that February date. I'm starting to doubt that it actually goes any faster than that. I think it's very likely it's going to go pretty slow. And then from that point forward, we just kind of make the best of it, I guess. See what happens. In worst case, if it only hits like 331, it'd be kind of crappy. And then if it consolidates here, it's going to feel like the most boring week and a half ever, right? And I don't think that's impossible, so we'll just have to keep an eye on it. Big picture, though, nothing drastically different. Obviously, today we talked about two pretty hugely different scenarios, and it's not these ones. It's the ones with, being a little more bearish, coming back down. Both scenarios would have us coming back up. So it's important to note, like both have us coming up first, going into fall of this year after summer. Maybe it's in August, maybe it's delayed until November. Couldn't really say. Earliest dates all said August. So I'm saying August, but maybe that ends up being like the pivot where it hits the low and then it just builds out for a couple months or whatever. It's a long schematic. But I will say that after that point in time, it's still like upside. Whether it's super bullish or not, at that point, you have to kind of just take it for what it is. And we know that there's a clear and evident, to me anyways, there's a pretty clear and evident build out here that could give you some support. But there's also this kind of problem of not really giving us like the best high in terms of directional movement. This being the big one for me, it's like, yeah, it's not really that far up. So there's scenarios in which you don't ever come back above 20 until like 2029. This is a very real possibility. And then there's scenarios where it does come above 20, it actually has a full rotation and it gets back to pretty far up there. I mean, it could be 72, it could be even just above here, basically from this 45 up to about 70 level. Very different. So I think both are very possible. And I think it's important to note that, yeah, there's upside on both, there's downside on both. And at the end of the day, like, what does this end up doing? Well, this ends up coming back down, in 2027. Like, just because it rotates and it looks a little stronger at first, it's a bigger move for sure. But in the end, where does it go once this happens? Well, you could say whatever you want to say, but if rotations continue, it's going to just kind of bleed back down towards $12. It's not just going to keep going, you know. And if that rotation did finish in like perfection, you know, perfect timing, and it hit here, that's it. Like it's done. This would be like a distribution upside down. So you'd end up probably sulking back below wherever that halfway of the halfway mark is, which is like $12. That's like over here. And that's pretty significant. I mean, when you look at that and then you look at the other scenario is more long-winded for sure, but it ultimately could have you going all the way up to $200 by staying low. You get a bigger push later that potentially comes back to where a lot of people have valuation. So yeah, really different setup. So this is another one that's pretty different. I mean, and we did a lot here. There's a lot of maybe some confusing bits, but the big picture is really pretty straightforward. It's like this is the target area between March 2026 and January 2027 is a 10-month window for that rotation. Everything else kind of lines up to maybe some earlier numbers that we picked out. Basically coming up to redistribute along $70. And then the alternative doesn't seem very bullish because it's really more about checking creeks. And I think that's another thing that this is like missing. Like we're not really talking about the creeks here, but you would basically jump this creek here going into probably January this year and then pushing up. And that's all great, but you'd ultimately still have like this big problem of like coming back. So it would end up being like a pretty nasty distribution schematic if that's the case, versus like pushing, jumping, dropping, pushing. That's different. This only goes to like 20s, it hits like $7 or $8.50 or something, and then it pushes up later in the year going into January, and it only goes up to 20 something bucks. It may seem bad, but that scenario was actually in some ways better. Yeah, in some ways. Long term, it's better. But who knows, man? If the operators are just trying to get back to square one here, they may just take it up. It's a strange chart, isn't it? It looks like SPY may have broken out. I wouldn't say much about it just yet, other than let's just wait. Some news drop during the after hours or something. The 4 hour looks like it may close above that trend, so it's technically a breakout on the creek. It does look like it's struggling right there on that bottom though, so it hasn't pushed back into that topmost range. So there was a low right there at like 599, 600, and it's right up underneath it. But I did push for what it's worth. Like I said, sometimes you go up before you go down. It's hitting the moving average right now on the 4 hour. So it's gotten a little bit of a relief here off that bottom for sure. It's a big candle. I'm serious, it's going to be a big wick on the bottom of that candle. My calls didn't budge at all. So, kind of up the creek on those. Oh well. Bitcoin is at 102,000. People were talking about that over the weekend because it dropped or something. What a mess. Yeah, I still see a lot of red. Whatever. Tomorrow may be a different day. I mean, it is a different day, but let's see what happens. I'm just concerned that this is like a weak, like a really weak reaction, I guess. This is my really elaborate prediction. I don't even really do this, but I was predicting that we would get I'd do the purple and the moving average. I don't know. I'm just trying it to see if it works out. It's never going to work, Booksy. I know. Maybe not, but I'm just going to try it anyways. So it's fun for me anyways to try stuff out. See if I can do it. All right, guys. I'm done. I'm tired. I wasn't even going to stream more than a couple hours a day, so that's that. I'm with you on the 610 hit. I think it might get there and then drop. That's been my idea, I guess, for a little while. I think it's going to pump on weakness, though. It's already getting propped up a bit. We'll see. Anyways, appreciate y'all. I hope you have a great afternoon, and I will talk to you tomorrow. As long as we're still here. Bye.